Jim up, please.
C+.
Walmart expanding deliveries by drone. In the coming year, the company says that it plans to launch the option at 100 stores in Atlanta, Charlotte, Houston, Orlando, and Tampa. That will make 5 states, including Arkansas, with drone deliveries. The machines have a range of up to 6 miles from the store, and so far, believe it or not, some of the most frequently delivered items include, okay, fresh fruit, I can get that. Pet food, even though it's kind of heavy, it would seem to have a drone carrying it. Ice cream.
It'd be a milkshake.
Yeah, by the time you get it to you, it's switched around. And eggs. So you gotta have a lot of faith that this is gonna come in, and I guess if you were a frequent customer and you do it again, I'd love to be able to get some of this stuff delivered to me. I'm a little concerned about all the drone traffic in the air with this stuff, carrying heavy dog food or something.
See, hard-boiled eggs, maybe.
Yeah. Hey, it's impressive. If eggs are one of their most important, one of their most often delivered items along with ice cream, it means you must be fast and accurate.
Bro, can you get some cannabis? You know, can they drop that off? Whoa.
That seems so
Like
futuristic.
Beavis and
Amazing.
what a world. What a world that we're living in. Coming up, how many of these are they going to be everywhere? Like in the Jetsons?
Yeah, and Amazon's doing it too. Although Amazon's latest thing is
There's going to be accidents and everything's going to be...
driving vehicles and a robot gets out and delivers it to you.
Are you going to be like this, walking around
That's what concerns me.
outside?
The idea of all these drones carrying heavy stuff.
Right. Well, more, speaking of fallout, more from the fallout from President Trump's online feud with Elon Musk. It all stems from Musk's criticism of the president's big, beautiful bill. We're going to talk about it with Speaker Mike Johnson at 8:10 Eastern Time. Both things, the feud and the bill. As we head to break, here's a look at yesterday's S&P 500 winners and losers.
as.com.
Five things to know ahead of the opening bell today. It's Jobs Friday. Number one, polled forecasters expect an increase of 125,000 non-farm payrolls in May. The unemployment rate is expected to hold steady. Remember ADP on Friday, it's not the same thing, not necessarily indicative. Maybe even jobless claims might be more jolts or something, but that was a little bit weak. This was unbelievable yesterday. I wondered, didn't you, about Circle? Shares of stablecoin company Circle sharply higher in pre-market trading after a big move yesterday. I think it was priced at like 31. Stock opened at 69, and today it's all the way up to 94, up another 13%. And the shares of Lululemon. I wanted to lead with that this morning. I suggested that this morning.
I did a double take when I saw this.
No, I mean the top of the show.
Oh, Lululemon?
Yeah, kidding. There's some other stuff, right? A couple other things
Yeah. Well,
interceded.
President Xi didn't even get top.
Yeah, President Xi didn't even get what she said. Didn't even. Plunged earnings and revenue, and the other guys, he and she, right? He, yeah. Revenue beat estimates, but comp sales growth of 1%, missed estimates of 3%. The company cut its full year guidance, citing a dynamic macro environment. The CFO said they're planning strategic price increases to mitigate the effects of tariffs. And then you got the shares of DocuSign sharply lower. Earnings and revenue beat estimates, but billings in the first quarter came in weaker than expected. The guidance...
It's a big move too.
Yeah, the company's guidance for billing in the current quarter also came in below estimates. Broadcom earnings and revenue came in slightly higher than analysts expected, and current quarter guidance also beat estimates on strong AI revenue growth, but the stock's pulling back a bit after a strong run-up since the recent low hit in early April, just after President Trump announced the sweeping tariff plan. Stock's up about 70% from the April.
There were some concerns from the Broadcom call yesterday that maybe all of this AI growth is not going to be quite as strong as had been hoped for, had been anticipated.
That's what they said. So that was five things.
That was 5 things. Flies by when you're having fun.
It's not National Donuts Day and Andrew's out for the second straight year. That's not the sixth thing you need
Well,
to know.
that's the 6th thing. That's the 6. We got
Which
our
is
5.
which
The
is a
sixth
minimum of what he eats when he's here.
He ate 14.
I think he ate like 14 minutes, but we know
That's in his prime.
he has a hollow leg. That's what my mother used to say. He's got a hollow leg.
Hides it all.
Yeah, exactly.
Anyway, when we come back, we've got some takeaways from yesterday's blow-up between President Trump and Elon Musk, what it could mean for Doge, the Republican Party, and Tesla investors. We'll have that conversation next. But first, happy National Donut
There we
Day,
go.
everybody.
It's got its own little segment.
Donut Pub sent us some early morning treats to celebrate. But again, Andrew's not here to eat them.
I have one from here.
Falls in the forest.
Donuts with bacon. The greatest
your
thing.
favorite. Stack's gonna get one.
The-
That's the best looking one, Stack. You chose wisely. Anyway, Squawk Box will be right back. Welcome back, everybody. President Trump and Elon Musk falling into an intense feud over the president's major tax and spending bill. Politico reporting earlier that the two men would hold a phone call today, but when NBC News asked White House Chief of Staff Susie Wiles about that report, she said there are no plans for a call today. For more on that fight and what it could mean for politics and Tesla investors, we want to bring in Eamon Javers, CNBC senior Washington correspondent, Phil LeBeau, who is CNBC's auto and airline industry reporter, and Steve Kovach, who is CNBC technology correspondent. And Eamon, why don't we start with you, just from the Washington angle on all of this? You were there at the White House yesterday reporting on this as it was all happening with some pretty head-spinning rapidity of how quickly these things were coming.
Yeah, it was astonishing yesterday, Becky. I mean, it's one of those events where, you know, it was shocking but not surprising at the same time. I mean, you're covering this incredibly surprising thing developing, or incredibly shocking thing developing in real time, but it's a thing that people had been predicting for months would happen. I think what was surprising about it was just the idea that it came so quickly, right? I mean, Elon Musk was in the Oval Office with the president a week before this blow up, and they were both heaping praise on one another. You know, the president even said yesterday he was trying to help Elon Musk with his black eye. Musk had a mysterious black eye in the Oval Office. The president said, you know, he tried to get him some makeup to cover it up. Elon didn't want it. And you felt President Trump, through the day yesterday as this was beginning to unfold, really handling this with kid gloves. And Trump is not somebody who handles many people at all with kid gloves. He was really delicate about this and trying to say, well, we have a disagreement, but I've always liked Elon and I hope we don't have bad relations going forward. He hasn't said anything bad about me. And then just this deluge of negativity and hostility from Elon Musk, up to and including saying that he thinks that President Trump should be impeached and removed and replaced by J.D. Vance. So it's just an astonishing cascade of vitriol from Elon Musk toward the president, who was, in his way, trying to handle it very delicately.
Yeah, I mean, the lack of impulse control.
I love you said that, Eamon, in his way. That's what we said earlier.
In his way,
the president hits hard, and to call the number one, to call the president, I'm somewhat like sympathetic for his position. The president doesn't get sympathy very much because he's a big boy, but also to call it
almost hurt.
to call it, I know, but to call it him measured is also not the word that you always use. I don't think, but you'd have to say
all of life is relative.
right. All of life.
The way Trump has been dealing with this has been absolutely measured, Joe. I mean, he has been very cautious around Elon Musk. You know, Musk was out there criticizing the big beautiful bill, the president's signature legislation for the year. The president didn't respond for hours and hours and hours, just kind of let it go, right? Which is totally out of character. I mean, Trump is the ultimate counterpuncher, and he was kind of handling, you know, Elon in a tissue box, you know, wrapped in bubble tape, you know, trying to make sure that this didn't blow up, and then it blew up anyway. Here you've got Elon Musk, you know, criticizing the president's signature legislative initiative, the big beautiful bill, and saying that his tariff initiative is going to cause a recession in the second term. So criticizing the president's biggest economic agenda item also of tariffs, and then also linking him with Jeffrey Epstein and saying that he was in the Epstein files. I mean, he's attacking all of his legislative and political ideas, and he's attacking, you know, who he is as a human being, whether he's a good human being or not. I mean, that's across the board, everything.
Yeah, and this had immediate fallout in lots of areas, but Phil, primarily the way we were watching it was in the stock market, where Tesla shares were down 16% or so, almost instantaneously.
And that's because the president wields enormous power and has the capacity, and frankly has shown it, that he will use his power if he is not, if he thinks that you are part of an entity that has done something wrong. You need proof of that? Take a look at the universities. Take a look at Harvard. And look how hard he has hit Harvard. What if he decided, you know what, I've had enough of Elon. He's popped off enough and I'm not going to put up with it anymore. If he makes that decision, look at all of the government agencies or the way Washington wields regulatory power that could influence the Elon Musk empire. You've got robotaxi launch next week. NHTSA has a lot to say when it comes to autonomous vehicle technology, the regulations, the investigations into specific automakers if they want to. You've got the FAA and NASA who are in charge of SpaceX launches, missions, approval of missions, And then finally, you've got the FCC, which oversees Starlink. What if the FCC sits there and says, we don't like the power that Starlink has? Maybe we think Starlink should be curtailed. There is any number of things that could be done here, Becky. XAI. What if Trump says, I think the DOJ needs to investigate XAI? It would not take much for him to make real headaches for Elon Musk's business, and ultimately that's the concern that investors should have. Yes, it's kind of fun to watch this Real Housewives of Hollywood back and forth on social media, but if you're an investor, you want to be focused on what are the potential implications here.
Clearly, Steve, in the first Trump administration, it was really kind of the generals that President Trump was talking about, his generals all the time.
Yeah.
He brought up front and center. This time, it really seems like it's more the billionaires, right?
Yeah, the tech billionaires specifically, yeah.
Have been, that he's collected on this, and it's been such a close relationship in so many ways. I mean, earlier this week, we had Omid Malik and Donald Trump Jr., who are investing together in all of these projects, and some of their biggest investments are XAI and SpaceX.
Right. Not to mention all the crypto stuff, by the way.
How does that kind of work out from this position?
Yeah, this is why I see it, because last summer when Musk kind of in a full-throated way came out in favor of Donald Trump, he gave a lot of his peers permission to do so as well, right? And so what we saw after the election, we saw all those overtures to Trump, we saw all the trips to Mar-a-Lago, the dinners at Mar-a-Lago, the money donated to the inauguration, and it all culminated in all of those men that you're talking about standing behind Donald Trump at the inauguration. And what did they get for it? Not much. I mean, so look, Google is still going through its DOJ case. It's in the remedies phase right now.
Apple.
Well, we'll get to Apple in a second. That's even worse. FTC. Mark Zuckerberg was in the White House every day trying to convince the president to stop this antitrust case from the FTC. That moved forward. Apple. Let's get into that. We all know the tariff situation. We all know the threats. They are calling out Tim Cook. There's nothing these guys have been able to sort of give the president in order to say, hey, get off my back, right? It's like I've been comparing it over the last couple weeks to, remember that book we read as a kid? If you give a mouse a cookie, he's going to ask for a glass of milk.
Sure.
That is the Trump's attitude here. What else can you give me? Not what can I give you?
What's actually maybe a little refreshing on all of this is we think it's so easy to buy influence in Washington.
It's not.
Maybe not so much.
It's not. It's like you have to do everything. It's like you give the glass of cookie, you give a glass of milk. By the way, you have to come to Riyadh too, or I'm going to call you out.
You don't know the counterfactual.
What's the counterfactual?
It could be much worse if you didn't.
Well, that's the thing. What is worse though? How is it? Tell me how it's worse for Apple.
President Kamala Harris might be worse.
Worse than you think she would be threatening Apple with tariffs
for them and the whole country, Steve. Yeah, that's how I feel.
But you think for
everybody,
you think Apple would be down 20% under a Kamala Harris presidency? I don't think so.
But it just wasn't. I don't think they backed Trump just because of what they were hoping that they'd get from.
They saw what Tim Cook did the first time.
Part of it is that. Part of it's deregulation. Yeah. Part of it is.
But they're not getting that. They're not getting a lot of that. The EV mandate stuff. I mean, that's part of the reason Musk is mad. He's not getting that.
Like I said,
Apple's not getting tariff relief.
Maybe it's tougher to buy influence in Washington than we ever.
Or at least with this president, it is. I mean. And in such an overt way too. So much of this would happen with lobbyists and so forth.
Yeah.
Here we have the principals themselves paying this money. Tim Cook, $1 million of his own money.
If it was working.
Yeah, right. Maybe it wouldn't matter if it was working. And so,
do
these guys just give up now?
If you were seeing some type of special treatment for that money, that's all you'd be talking about.
Oh, 100%.
Okay, so
but
you're not happy either way.
It's not about being happy or sad. It's just fascinating to watch.
Maybe it's good Trump can't be bought. How's that?
And what does that say about these executives who thought they could buy him?
Oh, $1 million from Tim. That's like me giving someone a couple of dollars on the street.
Yeah. Do you think he was happy giving that up?
I'm not sure. He has
$1 million is still $1 million. I know he has a great one of the top hit packages.
He's got thousands of millions.
Yeah. I just don't buy the idea that Apple would be in the position it is now under Kamala Harris, because it's so much of what we're seeing in that stock is because of tariffs. He did not have a tariff.
Steve, I don't even want to think about it. Some of us can't even fathom what it would be like.
Obviously, it would be just chaos.
Hey, Eamon, what happens today? We've heard that the idea that there was a call scheduled, that's not on the books for now. We anticipate things go maybe a little quiet for a few days.
I mean, your guys' conversation, we don't, the answer is we don't know, right? I mean, there's going to have to be some effort to de-escalate this, and we'll see where that goes when we'll watch all the social media throughout the day. Your guys' conversation reminds me of the old, there's this old saying in the underworld, that you measure a guy's integrity by the fact that if he's bribed, he stays bribed, right? And that's kind of where we're getting with this conversation, right? With unlimited political money in the system, and these huge billionaires willing to engage, and the president willing to engage in very transactional relationships.
Or is it?
And I think, well, right, is it transactional, or do they think it's transactional and then they don't get the transaction that they think they paid for? Right. The other, I think, thing here to think about is, Elon Musk's arc in American society. He is as influential an industrialist as we have maybe ever seen in this country, overseeing cutting edge technology companies in all these different fields, the richest man in the world. I mean, and you look at, so what's the predicate for that role in American society? I keep thinking back to Howard Hughes as a cautionary tale for Elon Musk, who ended up, the veil between genius and insanity can be very thin sometimes. The drug abuse of Howard Hughes and his tragic ending. And you just hope that Elon is not heading on a similar arc, right?
Toenails and fingernails in the urine.
The urine bottles.
Yeah.
Don't sugarcoat it.
Yeah, I mean,
it was on
that
the top
genius
floor of
and
the
wealth and
DI.
insanity.
Desert Inn. Yeah.
But by the way,
It's a
this is
toxic
not new
group.
behavior from either of these men. Like,
No,
this
it's
is
just-
not, it's just now they're going at each other.
Yeah, watching it wash up
Yeah.
against each other. Phil, very quickly, we'll jump out on this, but I was kind of thinking yesterday, boy, maybe Boeing's in better graces all of a sudden, because the first thing I thought on hearing this was, A, there goes Mars, and B, wow, I would not want to be on the International Space Station right now. That was before they even started threatening this stuff.
Huh. Yeah, look, I don't think that any of the threats that Elon made yesterday, he's going to follow through on. I just don't. I think that it's possible, but I think it's a very low likelihood that he'll do things like decommissioning some of his rockets, etc. And Becky, at the end of the day, if you are a competitor of Tesla in whatever realm, whatever industry, let him have it. Go ahead. You guys go have your little fight here. Do whatever you want to do. Nothing good is going to come out of it. And on the other hand, quietly do your business. That's what Boeing's doing. That's what everybody else is doing.
What did Boeing go up yesterday?
I didn't look at it yesterday. I think this morning it's indicated up, but so's the rest of the market. So I think it's hard to figure into that. But the first thing I thought was, wow, any issues we have with Boeing might get papered over pretty quickly.
Yeah. I just don't know how you take back the Epstein thing. If it comes out that it's not true, that's just reckless. I mean, that's almost.
Yeah.
He's going to have ICE knocking on his door.
Libelous.
Well,
Well, anyway, Eamon,
Was it slander or libel?
Slander when you say it, libel when you write it.
You got to know that, Joe.
yeah. I do both.
Thank you guys. We'll see you later.
All right, coming up, new developments in the fight. It's called Slibel. Between the Trump administration and Harvard University. Details after a break. First, a market flash salute. Capital downgrading McDonald's from buy to a hold, lowering its price target to 346, or from 346 to 315. The analyst, thanks for that. It's at 307. The analyst cites increasing doubt about the company's ability to boost its domestic comp store sales significantly throughout 2025. Squawk Box will be right back.
对吗？
CBU. A federal judge temporarily blocking the White House from barring entry into the U.S. of foreign students that are seeking to study at Harvard. The order stopped the Trump administration's plans pending further litigation. Earlier yesterday, Harvard amended a lawsuit to challenge the White House's latest move against it. The White House claims Harvard hasn't done enough to combat anti-Semitism on campus. The school, meanwhile, is arguing that President Trump is retaliating after it refused to allow more federal control over its activities.
When we come back, the tariff impact on a sector you might not imagine could get hit, video games. We saw a huge demand for Nintendo Switch earlier this week, lines along the block, around the block, and one guy who was there for what, a month? Is that what Steve told us? But how? It's donut day over here, so look out.
I didn't know whether you were talking to me.
Yeah, I was talking to you kind of, but then I realized you were eating a donut, so I stopped. Anyway, how could game sales be impacted by levies on key countries in Asia? We're going to talk about that next, but it was a month, right? It was a month.
To learn more.
Nintendo releasing the Switch 2 console this week in the midst of the White House's tariff campaign on China, Vietnam, and other key supplier countries. After some deliberation, Nintendo decided not to raise prices on its new consoles, but it did hike prices for accessories. Joining us right now on the tariff impact on gaming is Jens Hilgers, the founding general partner of Bitcraft. And Jens, thank you very much for being here. I know you have been in this industry for a very long time, 27 years or so, been following everything that happens here. I am almost skeptical that slight price hikes would stop gamers because they seem to me like they are the most fanatic of fans. What do you think the impact of these potential tariffs are?
Well, to begin with, it's certainly painful for gamers right now to see what sort of drives their gaming passion, which is the underlying hardware in particular, getting more expensive by those tariffs. So it's about 30% right now that we see impacting consoles, but also gaming peripherals, the mice, the keyboard that you use, PC equipment, PC upgrades, all that is affected and might go up to about 145% again. What is a bit secluded from that is the mobile gaming segment, where we only see 20% of tariffs on smartphones, which is the largest gaming platform with about 50% of our industry. Now, that will certainly take that decision for gamers. Will I invest in new hardware? Will I upgrade my hardware? That will put a big question mark on that. And I would believe that some gamers might just delay a purchase. They might delay an upgrade, or they might just delay that sort of buying into Nintendo, who's been hit particularly hard here, for their next cycle. That will somehow, I guess, have a spillover effect into digital software sales as well. Well, they have to do an upgrade, so there might be a bit of pressure on digital software sales. I think what's interesting and a nuance on this is that the last years might give gamers a bit of forgiveness, in the sense that the sort of requirements of the latest generation of games have not really increasing too much in the last years. So there's not like too much of pressure right now for gamers to have to upgrade to play the next Call of Duty potentially. So maybe they can endure the next 6 to 12 months. But it's really going to be telling what happens with the taxes, and what's to watch here certainly is the next holiday season.
So Switch 2 for now is not going to be increased for the console itself. The docks that are used to play it on a full-size screen are going to cost $10 more. Straps for 2 controllers will see a $1 increase. That doesn't seem like a very expensive hump to jump for some of these things, but you're right, when it comes to the consoles themselves, I think Microsoft is recommended for its Xbox Series S, which starts right now at $380, up $80 from the $299 price tag that debuted in 2020. So I guess it depends on how much of this gets passed on and what the elasticity is in terms of price, what the ability for these gamers to observe. Would you hold back on investments in this arena until you see this out?
I think there's interesting pockets of investment, and consider we're early stage investors, so the outcome of our investments are to be seen in 5 to 10 years from now. But for the public market, certainly we can see the impact of sort of the tariffs right now on companies that are in particular exposed to either sort of hardware sales to begin with, console manufacturers, peripherals manufacturers. We see that for sure, and that would probably be careful as we don't really know what's going to happen on 9th of July. The other part is certainly the release of AAA games. I do believe that sort of higher profile games, there might be a consideration from larger publishers and developers, like, should I release that game right now? Should I push that out a bit more as pressure builds up on sort of cash in the pockets of gamers?
And I guess the big question is, do you think any of the manufacturing would be moved? I mean, so much of it is in China right now, a lot in Vietnam too, but it's not something that most of these console makers can be really nimble about. It takes a long time for them to plan these things as well.
100%. This is a difficult endeavor for manufacturers, and it feels a bit like a whack-a-mole game somehow for them, I guess. So seriously readjusting your supply chain, seriously readjusting production manufacturing is a difficult endeavor. So I'm not sure which path this will go. There has been efforts on diversification of where we manufacture our equipment, and Apple is subject to that too, right? So I mean, 40% of their App Store revenues are based on games content. So you see that device is used a lot for gaming to begin with. So is the entirety of sort of smartphones at large. And we have seen Apple diversifying already and now being pulled into the US by the president. So with local manufacturing. So I believe there's going to be a continued effort, but it's hard to maneuver for these companies.
Jens, thank you.
Thank you very much.
It is 7 a.m. Just after on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan along with Becky Quick. Andrew's off today. Among today's top stories, conflicting reports about a cooling of tensions between President Trump and Elon Musk after yesterday's public feud. Politico reporting that White House aides has scheduled a call between the two men for today. But when NBC News asked Chief of Staff Susie Wiles about that report, she said that there are no plans for that today. We might have a chance to tell you about President Trump and President Xi, but we're not sure we have time with this other feud. between Elon Musk and President Trump. There are other things happening in the world. Tesla stock, meanwhile, rebounding this morning after tumbling 14% yesterday. The decline wiped out $152 billion in value, pushing Tesla's market cap below the $1 trillion level. And Paramount Global Chair Sherry Redstone is undergoing treatment for thyroid cancer. The spokesperson said the 71-year-old is maintaining all professional and philanthropic activities and is grateful that her prognosis is excellent, and that is good news because, and if you want, you've heard thyroid cancer, one of the most curable forms of cancer, 98 to 99% cure rate overall, for 5-year survival rate. There's different kinds, 4 different: papillary, follicular, medullary, and anaplastic, and the first 3 are greater than 99% cure rate. If after diagnosis, and the other one's more rare and it's much less curable. Has a lot of factors due to age and other things, but hopefully she'll be fine. Wall Street awaiting the May employment report coming up at 8:30 a.m. Eastern Time. Senior economics reporter Steve Leisman joins us with a preview. I almost forgot what you look like. Where were you, Leisman?
On vacation, Joe. I took a week
Somewhere
off.
in the sun.
Yeah,
you got some sun. You look good.
Somewhere.
Sun.
Were any Grateful Dead or concerts involved, Steve, or no?
No, that's not till early August, as you know, Joe, when they're playing in San Francisco. But I don't know if we'll make it out for that. But there was some boating involved, shall we say?
Oh,
And fishing.
But they probably want me to get to the report about the jobs report. I'm thinking, Joe. What do you think?
who's they? Go ahead.
Who cares?
You know.
Who cares what they think? Yeah.
Good
Oh, they
morning. It
didn't
is
say
wonderful to be back, folks. No, they didn't. I'm just gonna move on to this idea that some modest weakness, Joe, is expected in the jobs report, and that comes from tariffs. But some of the weakness is kind of interesting. Could come from unwinding jobs added to service tariff front running. Here's the numbers. Payroll is expected to be down to 125 from 177. Still a decent number. Unemployment rate unchanged, 4.2%. Could be some immigration deportation stuff going on inside the unemployment rate. We'll talk about that later on this morning. Average hourly wages, 0.3, estimated at 0.25. It came in last time at 0.25 last time. That's 3.9% year over year. Modestly rising excuse me one second here. Modestly rising jobless and continuing claims are one sign of weakness there. A weak ADP, small business hiring, that has been a problem. More layoff announcements, including in services, retail, tech, government, and nonprofits have all been some of the reasons why people expect weakness to come from the current, in the current jobs report. One thing we're seeing here, though, is that weakness in May could also mean that employees who were laid off, who were brought on to handle some of the things. Now, Andrew Challenger, Senior Vice President of Challenger Gray & Christmas, said, quote, the tariff funding cuts, consumer spending, and overall economic pessimism are putting intense pressure on companies' workforces, and companies are spending less, slowing hiring, and sending layoff notices. Now, that weakness in May could also mean some employees were laid off or brought on to handle increased trade flows from tariff front-running, like in trade and warehousing, and perhaps in retail. At the same time, employment has been robust, beating estimates the past 2 months. It's generally a bad bet to underestimate the U.S. job market's resilience. In the past 2 months, it's been above estimates. The key might be that while weakness is expected, unlikely to be enough to knock the Fed off its wait-and-see approach in June. At 82%, the probability of September hike, looks like traders look confident that the weak jobs report in the next couple months will motivate the Fed to cut, but not yet. We're going to talk to Philly Fed President Patrick Harker for his last broadcast interview before retirement. That's exclusive today at 1 p.m. Joe?
Great, Steve. I actually did have something. I wanted to ask you about what's the latest Atlanta Fed that you've seen, and what are we supposed to think about that, and why even go through the exercise of paying attention to the Atlanta Fed?
Well, it's a good point, Joe. The latest Atlanta Fed, hold on, I got to look it up now. I think it was around 2.9 or 3%. Sorry, 3.8% is the Atlanta Fed. And that's why, Joe, we do our rapid update. The Atlanta Fed is one model of the economy. It's one that's followed. People kind of think it has this Federal Reserve imprimatur because the Fed says it, but the New York Fed has a model. Other district banks have models. We put together, when we do the rapid update, Joe, the average of 14 models out there, and we tend to be a little bit better earlier on in the quarter. Atlanta Fed swings around. Right now you have this inventory and this trade bounce back that'll happen in the next quarter. So the idea is you really want to average the two, the negative from the first quarter and the average in the second quarter.
And what's your number today? How do we feel about ADP? We're kind of, sometimes we're right, sometimes we're wrong, right?
All right, now I got to call up another spreadsheet here, and I'll tell you what those numbers are. They've been running plus or minus 56,000. They were way off. 51,000. They were way off by 107,000. Way too weak last month. They were pretty much spot on February and March at plus or minus 23,000. So it's there. Look, Joe, it's data. But when you ask me what I think about ADP, I think you also have to ask me what I think about the government's numbers, which are suffering from lower survey response rates. And I'm not sure ADP is any worse or any better. You just have to wait. The market wants exact answers now. The economic data can't give it to them. You just got to wait over time. For example, averaging the first 2 quarters of GDP, waiting for the revisions of the jobs numbers, looking inside it. But the market's going to make instantaneous reactions, and I guess eventually correct if those numbers are wrong. I can't sit here and vouch for how great these numbers are, because they're not. It takes time to measure an economy the size of the U.S.
Taken in total, take the ADP number, the jobless claims, and what we get today. Are you willing yet to say that there are signs of emerging weakness in the labor market or not?
I think a little bit, Joe. Like that 247, what was it, on jobless claims? You're creeping up above the 1.9 level on continuing claims. There's a bit of weakness. But look, the bigger story to me is all of the back and forth. Like, I led my story talking about this idea, Joe. You could have the weakness come from the strength that was the result of front-running the tariffs. We noted last month there was a plus 29,000 on transportation and warehousing. A lot of stuff coming in. Had to hire folks to get it off the ships and get it across the country. Those folks may be gone now. Not sure that's the weakness from the tariffs. I am interested, very interested in the anecdotal information that's out there, where businesses are saying, hey, we were frozen in place here. And we're hearing a lot of that. And when and if we get to a point where the tariff situation is clear, where the regulatory situation is clear, perhaps we can get back to hiring. But that's one of the places I expect to see the weakness. It's not necessarily firings, but not a lot of hiring. So we'll have to wait and see. At the same time, Joe, like I said, the last 2 months, the street has overestimated the jobs numbers, or underestimated jobs. They've come in stronger than expected. Bad bet to bet against the U.S. jobs market, especially given what's happening in the immigration situation and deportations.
All right, Steve. Thank you.
Next show.
All right, when we come back, another health tech company coming to market. We will talk to the CEO of Omada Health, Sean Duffy, about today's IPO and the prospects for his business. And the executive chairman of Strategy, Michael Saylor, will talk to us about the company's new preferred stock plan and his appetite for more Bitcoin. Squawk Box will be back in just a moment.
kitsch.com.
Shares of stablecoin company Circle are sharply higher in pre-market trading. The stock opened at $69 yesterday. The IPO was priced at $31, which was above the initial range. And it closed above $83. Circle's USDC stablecoin is the second largest stablecoin on the market behind Tether's. And you want an IPO like this?
Yeah, we'll take it.
Joining us right now is health tech company Omada Health. It's listing on the NASDAQ today. The IPO priced at $19 a share. That's right in the middle of the expected range. It's also the second health tech IPO in just 2 weeks. And the co-founder and CEO of Omada Health is here with us today. This is Sean Duffy. And Sean, thank you very much for being with us.
Absolutely, such fun to be here.
Yeah, you excited?
I'm thrilled. I am thrilled.
Let's talk to people, first of all, about what Omada is. You offer care for people who have already been diagnosed with disease, prediabetes, diabetes. How does that work?
That's right. So Omada is a between visit provider. So I was in medical school, and I saw this problem on a daily basis. And that's too much of U.S. healthcare is done in that 1 to 2 visits you might have per year with your primary care doc. And that's not enough. And it's not the right kind of care, especially for the 156 million Americans suffering with chronic disease. So we asked, well, what is the solution? How might you bend the curve of disease? And the solution is persistent, proactive care between someone's doctor's visits, and that's Omada. That's what we do.
That's basically lifestyle, right? Like if you're going to deal with this, you have to be on top of it all the time. It can't be an every 6 months or every year type of checkup. This needs to be something you're dealing with every day.
You do, and you need a lot of. So we get our members compassionate care teams that get to know them, understand their goals. They're in their corner and in their pocket on a daily basis. And we get them devices that track clinical progress and tie the room together with a software app.
You work for employers like Costco and Honda who can offer this to their employees, but you also work with some of the pharmacy benefits managers, CVS Caremark and beyond. How does that work? I don't understand the different.
Absolutely. Yeah, so we have 2 routes to market. One is we work directly with employers like Costco who support Omada and on behalf of their employees across all of our condition areas. And then the second, which you've highlighted, is we work with health plans as well as pharmacy benefits managers. And that's where we work hand in hand to bring Omada's solutions to their employers who are asking for support in prediabetes, obesity, diabetes, hypertension, musculoskeletal care, and more recently, support with their members who are taking GLP-1s.
Your last round of funding was in December of 2021. That was a while ago. You brought in $192 million. It pushed the valuation above $1 billion. I think the valuation today would be a little higher than that.
That's right.
But not hugely higher 3 years later. What do you need the money for right now, or do you need the money? Why are you going public?
Look, we're thrilled with the outcome. We're thrilled with the progress since we last, raised the financing. I mean, if you look at our quarterly revenue, we've increased it by 2.7x over the last 3 years.
Okay.
And then, it's one of those things. Today is the right moment for us because we like to scale the model, we like to scale the business. Equally, we felt pull from the capital markets. I mean, these investors aren't shy. You ask them for feedback, and they'll tell you, look, we'd love you to come to market. And so I'm excited for that and excited for the capital to continue doing what we're doing, innovate on GLP-1s, innovate on incredible software experiences that leverage AI.
The other health tech company that's gone public is Hinge, and it's done pretty well. It's a big bump of about 25% right out of the gate. You anticipate that could be what happens here?
Look, we're thrilled with Hinge. We're thrilled with really this next generation of digital health companies that are delivering real clinical services that are differentiated, that are published, that are well studied, and we're excited alongside them to set the stage for the next chapter of digital health.
You all don't prescribe GLP-1s, even though you're dealing with prediabetes and diabetics. Why?
Our goal at Omada is to complement someone's primary care doc. And we've often found that our patients like getting their GLP-1s from their primary care doc. And so our job is to maximize the benefit of that decision, support people alongside with nutrition, with exercise, with the things that an injection doesn't do. I mean, an injection's not getting to know you, and that's our job at Omada.
Are you a doctor? You went to medical school. Did you finish?
I dropped out of med school. I was in Harvard Medical School. Got the idea, behind Omada. Got the bug, and just couldn't stop working on it.
You've got some good partners too. U.S. venture partners, Andreessen Horowitz and Fidelity's FMR are your biggest shareholders.
Yeah, thrilled with the investors. These are folks that believed in the mission and know healthcare, know the end markets, which is always very important to
You
us.
got into Harvard Medical School.
I did. I went. I was in it.
Where'd you go to undergrad?
At Columbia University, so right around the corner.
You had to have straight A's.
I did fine.
And they still have MCATs?
Yep. They do. They still put you through that.
Get anything wrong?
What's that?
You get anything wrong on your?
No, not a single question wrong. Never, Joe. Never missed a question.
Harvard's impossible to get into. It is. Any medical school is difficult. I know.
Just in terms of the technology and what you all are working on, is AI a big part of this? How do you use it?
So before going to Harvard Medical School, I worked at Google. My gosh, we're doing the things in software right now that I only dreamed about.
Yeah.
Back in the day.
Weren't you a tennis pro before that?
No, you do not.
Astronaut.
Well, if you want to win, you can play tennis with me.
Astronaut, yeah.
Not particularly physically inclined activities. But yeah, so it's a big piece. We just launched 2 incredible new AI tools for our members to support nutrition, goal setting, and importantly though, our members still want real people. They ask us, I want someone real to care for me.
I hear that.
And so it's combining the compassion with the technology.
Well, Sean, we want to thank you for coming in today. We'll be watching at the opening bell, and good luck to you.
Thank you so much.
Thank you very much.
All right, coming up, some stocks on the move this morning, including Lululemon, and don't miss our interview with House Speaker Mike Johnson. So much to get into, including that epic battle we saw yesterday play out on social media between President Trump and Elon Musk. Also, we might talk about the tax and spending bill, hopefully, and deficit concerns. Squawk Box returns in just a moment.
Time now for today's AFLAC trivia question. Today is the 81st anniversary of the D-Day invasion. How many U.S. troops crossed the British Channel that day? The answer when Squawk Box returns. now the answer to today's AFLAC trivia question. How many U.S. troops crossed the British Channel on D-Day? The answer, 73,000.
All right, let's get to Frank Holland. He's got a look at this morning's pre-market movers. Frank, happy Friday.
Happy
and there
Friday.
are some pretty significant movers this morning.
Yeah, absolutely. 3 companies lower this morning after reporting their earnings after the bell yesterday, and that's despite all 3 of them beating top and bottom line expectations. Why don't we start off with Lululemon? I was looking at the chart right now. You can see this is a huge drop right now. Shares down more than 21%. This is after Lulu, it cut its full year earnings guidance much more than analysts were expecting. CEO Calvin McDonald on the earnings call saying that he was, quote, not happy with U.S. growth, citing a pullback in the consumer. The company is also looking at strategic price increases to mitigate the impact of tariffs. Also new this morning, BMO lowering the price target on Lulu to $250, down from $302. Again, shares down more than 21%. Also looking at Broadcom this morning, also lower after slightly beating earnings estimates. The chipmaker's current quarter revenue guidance also coming in just a bit higher than expected. Broadcom's AI revenue, that grew to $4.4 billion in the quarter, 46% higher year over year. CEO Hock Tan saying the company expects that number to grow to $5.1 billion. The software business that includes VMware also grew 25%, beating estimates. But take a look at this chart. Shares of Broadcom still down about 2.25% right now. Also looking at DocuSign this morning, checking the moves on DocuSign, down another huge drop, down more than 19%. Q1 billings and second quarter billings guidance, that came in below estimates. DocuSign also initiated a $1 billion share buyback. Again, share down more than 19%. Got a question for Joe, Becky. Joe, you still wearing the Lululemon pants? Because they're talking about that U.S. demand being a little bit soft.
Kind of sad, Frank. It's kind of sad because I'm wearing some. Look what's happening.
Some people don't like the new
You're the
products. Are you
problem.
buying
You
the
haven't
new
bought new
ones? Are you buying the new ones?
I do have some new ones. They don't make this kind anymore. This is almost it almost feels like denim,
They're
but
afraid.
it's unraveling. It's starting to fray.
Have you tried?
I wash them a lot.
Have you
I
tried
wash them a lot.
Bluari? I think that's how you pronounce
That's
it.
good.
Bluari.
Yeah, wash them a lot. Yeah. No, if I were to, I have other ones that I can wear, Frank, but I like these. But
I know you're a Lulu guy.
You are resplendent, sartorially splendid every day.
I try.
Yeah, you do.
I try, Joe.
Yeah.
It's a lot of pressure coming on before you guys. I just try to live up to the moment.
And we appreciate it.
I do.
And Becky, it was great to see you last week, by the way. I got to see Becky in
too,
person.
Frank.
See Becky like host a panel, took some notes, learned a lot. It's great. It's always good.
Go to
Business
Nashville to hang out.
thing. Yeah.
All right, happy
Good to see
Friday,
you too,
guys.
Frank.
Good place to hang. Yep.
All right, when we come back, we're counting down to the May employment report. We'll have the numbers and the instant analysis coming up at 8:30 Eastern Time. That's just over an hour away. Also, former St. Louis Fed President James Bullard will give us his reaction to the report. We'll talk about what it could mean for the central bank's next move. Squawk Box, we'll be right back.
Welcome back to Squawk Box Futures. You can see him come down just a little bit. We were triple digits on the Dow earlier, but still pretty solid. Treasuries, the yield has come down a little bit in recent sessions. Take a look at oil, which has maintained its level above $60 a barrel, now 63 today. Gold made its move and kind of been treading water for about a month or so. We shall see. And Bitcoin was up to 111, now down to, you can see today, 103. It's up a little bit. Coming up, we'll talk about Bitcoin with Strategy Executive Chairman Michael Saylor. Yep. Remember, that's the new name, basically. We're going to talk about the company's new preferred stock plan and how others have followed Michael Saylor's lead, adding Bitcoin to their portfolio. Squawk Box return in just a moment.
Ready PG.
MicroStrategy, now known as Strategy, expects to raise nearly $1 billion from the IPO of preferred stock that pays a 10% yield. The company plans to use the proceeds for general corporate purposes, including buying more Bitcoin. Join us now is Michael Saylor, Strategy Executive Chairman. You've described some of these moves, these financial moves before to us, Michael. Is this more of the same, or is there anything unique or different about this round?
You know, what's exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other preferreds were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual US dollar yield forever. We're getting the capital forever. And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin, and this is a way to get leverage without worrying about any kind of bond coming due.
Wow. You obviously are the ultimate hodler. You would buy, if you have money, you buy Bitcoin, I think, don't you? It doesn't matter whether it's up, down, or flat.
150% Bitcoin, Joe.
Do you think at this point that there's, let me just say, what are you waiting for at this point in terms of good news? I think the regulatory environment since the election is definitely improved. We've talked about how much harder it gets to mine, and there's halving. When is the next halving, and what are the next moves that would cause the asset Bitcoin to get to some of these? I don't know whether you have Tom Lee type projections. I think Tom the other day said eventually it could get to 2.5 million per coin or higher before we never really will get to mining the last coin, will we? Not in our lifetime.
Not in our lifetime, but the last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45, $50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe.
Hey, Michael, you keep popping up in my feed. You've gone viral with some comments you made at the Bitcoin 2025 conference in Las Vegas recently, and it was where someone was asking you about proof of reserves for strategies 567,000 Bitcoin. You said that was not a good idea. You don't agree with it because you think it's a security risk to actually do the proof of reserves that way, but there have been a lot of critics in the Bitcoin world about that. They say that snubbing audits like that flies in the face of Bitcoin's founding principles, which are verifiable, transparent ownership. And they say for a company that has its entire business model around Bitcoin, that stance raises some eyebrows. What do you say to that?
Crypto Twitter is very colorful, and we have these fun back and forths. The highest standard of in this case, transparency would be a public company audit from a company like KPMG, where they're auditing both your assets and your liabilities, combined with officer representations pursuant to Sarbanes-Oxley about related parties and the like. And so we are a publicly traded company. Our assets are audited. Our Bitcoin reserves are audited by KPMG, as are our liabilities. I think that we're always thinking and considering, is there a way to do proof of reserves in a secure way? We're not enthusiastic about publishing all of our wallet addresses and having people track them every minute by minute, because it exposes our custodians, our counterparties, and our own employees to more IT risk. But we're considering it. We're thinking about, is there a way to do it with a zero knowledge proof? And we're also always thinking about self-custody and what is the right way to manage custodian risk. And I think what you see is there's the OG crypto advocates who developed a bunch of very strong ideas over the past decade, and there's an emerging class of institutional Bitcoin holders like BlackRock, like the ETFs, and like the Bitcoin treasury companies. And they're focused not just on the assets, but also on the liabilities. We have to audit and publish those audits with 10Qs and 10Ks.
Hey, Michael, just very quickly to follow up. Binance's former CEO, Changpeng Zhao, made some kind of cryptic comment where he said he probably sold Bitcoins. People thought that was referring to you. I am certainly not referring to Changpeng Zhao as some paragon of virtue, but just to be clear, that's not the case. You haven't sold?
No, I've never sold any Bitcoin. I haven't sold my personal Bitcoin. The company did a tax wash transaction for a de minimis amount of money many years ago, but the company has accumulated Bitcoin, in every period since we began this journey.
Michael, when I heard that right now ECDSA signature breaking would only require 1 million qubits. I'm speaking your language now. I have no idea what I'm saying. Down from a previous estimate of 13 million qubits, theoretically means that private keys from public addresses could be broken. Shor's algorithm could be gotten around by quantum computing. So quantum computing, at some point, could break the algorithm for Bitcoin. Are there countermeasures that they could be put in? You probably understand what I'm asking you. Do you worry about that? You look like you slept okay. You look like you slept okay last night.
It's mainly marketing by people that want to sell you the next quantum yo-yo token. But look, Google and Microsoft aren't going to sell you a quantum computer that cracks modern cryptography, because it would destroy Google and Microsoft and the U.S. government and the banking system. And at some point, I don't think it's this year, next year, in the next 5 years, but sometime 10, 20 years out, if there's a hyper-powerful computer that threatens modern cryptography, the answer is Bitcoin network hardware upgrades, Bitcoin network software upgrades, just like Microsoft, Google, the US government upgrade all their messaging and banking applications. The key for everybody is Bitcoin's a protocol like the English language and base 10 math. When the quantum computer breaks your calculator and breaks your messaging app, you're not learning base 16 math, and you're not going to switch to a different language. You're just going to upgrade your software. And Bitcoin's a monetary protocol. We're just going to upgrade the software, Joe.
Wow. Because there are people that throw that around that know, actually they know less than I do, I think. But so there are countermeasures to deal with that.
If I wanted to hack your Bitcoin, I'd send you an email saying a quantum computer can hack your Bitcoin. Click on the link to upgrade now, and then I'd steal your Bitcoin. It's 10,000 times more likely I'm phishing you than there is a threat. So now I'm not worried about it. Bitcoin's a protocol. The software gets upgraded every year. The hardware is being upgraded continuously, and it's the hardest thing in the universe to hack. They will hack your banking system, your Google account, your Microsoft account, and every other asset you have, much sooner, because they're an order of magnitude weaker.
Okay, great. On Halloween, what color tie do you wear?
Look, we're all orange. It's the orange.
It's always orange. So even on Halloween, it's just an orangey, it's an orangey sky. Yeah.
There's an orange wave coming, and every public company has got to be thinking about Bitcoin on their treasury because, you know, Bitcoin is digital money. What if Moore's law applies to money and your capital is doubling every 18 months? That's what the Bitcoin treasury companies have concluded.
You've got between 37 trillion and 50 trillion reasons to buy Bitcoin, I think, don't you? Probably come up with that. 37 trillion and counting.
Look,
far as
Bitcoin
debt.
is the future.
Yeah,
Bitcoin is the future, and it's the opportunity for everybody.
Thanks for coming on today, Michael. We'll see you later.
Yeah, thanks for having me.
Okay.
When we come back, another stock on the move this morning. Plus, in the next hour, House Speaker Mike Johnson on the tax bill, the deficit, and yes, that epic battle between President Trump and Elon Musk. That's coming up at 8:10 a.m. Eastern Time. Right now, though, as we head to a break, check out shares of Microsoft. That stock hitting an all-time high yesterday and notching its 6th straight positive day. That's its longest daily winning streak since last December. It has been on a tear. Microsoft is now up more than 30% since its lowest close back of 2025, back on April 8th. Wow, that is a move. Squawk Box will be back in just a moment.
And make it count.
All right, President Trump just posting on Truth Social, prices are down, income is up, our border is closed, gasoline is cheap, inflation is dead, our country is booming, companies are pouring into America like never before. No mention of Elon Musk in the Truth Social.
Unless it's encoded there somewhere.
Yeah, like the first letter of every line.
Yeah. We need quantum computing to break it.
Right. When we come back, we will talk about the social media slugfest between President Trump and Elon Musk that left Tesla shareholders battered and bruised. That stock rebounding slightly this morning. It was off by more than 15% yesterday. This morning up by about 4.5%. Question is this a good time to get into Tesla? We will have that discussion and much more when Squawk Box comes right back.
C+.
Well, we've been talking all morning about the epic feud between President Trump and Elon Musk. Joining us right now on the Squawk Newsline, Andrew Ross Sorkin. Andrew, you want to weigh in on this too?
Hey guys, how are you? I'm actually out in Stockholm at the Brilliant Minds Conference, where there are a whole bunch of CEOs and other business leaders, and we've all been obviously talking about it, but also talking to folks in Washington and the Valley. And I did want to weigh in on it because I'm not sure that the full implications have been sort of thought through in terms of the domino effect of where this could go for Tesla. Obviously, there's the EV mandate issue that folks have been focused on. But the bigger issue long term is whether you think there's going to be real retribution from the Trump administration when it comes to how his robotaxi effort that's going to start in Austin very soon is going to ultimately play out. You remember that he sat actually doing a press conference with the Department of Transportation, and so much of the stop movement, even prior to the election, moved in part because there was a view that what he's doing would be looked upon favorably by this Trump administration, given everything that's now happened, and maybe there'll be a detente, who knows. But the possibility, given what we've seen this administration do as it relates to Harvard, as it relates to BlackRock, as it you name the lawyers in New York City. I mean, this is a president and an administration that has obviously taken it out on folks that they have been unhappy with. And so here's a situation where there is a potential longer term for there to be true implications on the company, not to mention, by the way, what happens with SpaceX. I imagine this is a very good day for Jeff Bezos and Blue Origin, who of course have been anxious themselves about what would happen with the competition between them and whether SpaceX would ultimately benefit. I mean, you could sort of stretch this out and start to think about the implications for Sam Altman and an OpenAI. You could stretch it out to start to think about the implications even for Bill Gates and the Gates Foundation. USAID obviously taken away from Doge. The Gates Foundation has wanted to be able to try to get in front of Trump for a long time to try to get some of that USAID money back. Maybe with Elon Musk now out of the picture in this way, and we'll see how far out of the picture he is, perhaps Trump would actually come and rethink some of this. So I think that there's a whole bunch of sort of issues that are on the table today that maybe were not on the table yesterday.
Yeah, and Andrew, we were talking about that earlier this morning, even whether Boeing would be a big beneficiary of this too, because any of the problems that you might have with Boeing, you would obviously think could get papered over by some of these issues. We had a long conversation about this earlier with Steve Kovac, who was here discussing it, along with Eamon Javers and Phil LeBeau, just kind of digging through all of these various possibilities. And even if this is something that gets papered over, or if there's a makeup situation, you tend to think that President Trump may forgive, although that's a question at this point, but even if he does it, I doubt he would forget some of these slights.
You know,
and
two people I'm thinking about.
You have, we would talk through all the different organizations that you would have, the arms of government, that would be looking over all of Elon Musk's empire, and that he would have to have not only government contracts from, but approvals on other issues too.
I've been thinking a lot about two people. I don't know if you call them crossfire, but think about somebody like a David Sachs and the crypto effort he was put in place by Elon Musk. Now, of course, is in this administration. Where does he ultimately sit in all of this? You could think about Stephen Miller. And by the way, Stephen Miller's wife works for Elon Musk. So think about what that conversation was like last night. I mean, there's a lot of fascinating and strange bedfellows in what is turning out to be the drama of the moment.
Yeah, earlier this morning we also talked about Omid Malik and Don Trump Jr., who were here earlier this week, and many of their investments are in things like XAI and SpaceX. So all of these implications certainly are things that have people talking and trying to figure out.
I think the long-term question, which may be even bigger than all of this, is does this moment and what we've seen even happen to the Tesla stock, is this a moment where the CEO community, business community, some of whom I think have actually wanted to say certain things about the president and the administration, be critical in ways that it might be more public than they have been thus far. Does this give them license to do that, given that Elon has now done that himself, or given the reaction to the stock price and an anxiety about retribution and what we saw, $150 billion get wiped away on the market cap of that company, at least temporarily? Does that actually chill people into saying, actually, I just saw the example and I'm not going there?
Yeah, I think what Phil was talking about earlier, and Steve Kovac as well, is you kind of, if you're another CEO watching this, you may keep your head down at this point. It reminds me of Indiana Jones, snakes, very dangerous, Indy, you go first. Anyway.
Reminds me of it, paper, rock, scissors, and I don't know what you'd call the president, but it's either Elon's paper or the president is scissors. If it was a bad, Elon can take on anyone else he wants with his $200 billion, but I think this was pretty stupid, and I don't think it's going to work out very well. Probably for either, but it's not good for either, I guess. But the president of the United States is.
Well, how do you think this plays out in the midterms? Because the other piece of this is if Elon starts to put money behind, other folks, whether they're other Republicans, to go against folks who obviously may sign up for the big beautiful bill or not.
Reputationally, Andrew, I mean, if you say someone's on the Epstein list, you better know. Reputationally, or it's pretty reckless. I would want to know.
You better know, but the other thing is, we all think the relationship is, sort of like inseparable, but the truth is, think about all of the folks who said things about this president over the years and somehow managed to get back. You can think about some of the comments J.D. Vance made so many years ago about the president. You can think about some of the things the president said about Ted Cruz. I mean, it goes back and forth in a very unusual way.
And any detente that's reached, how long? And I'm not saying it can't be reached. That's a crazy thing. They could be friends again. But then, how long does that detente last? When Elon is the only person on the planet more mercurial than President Trump? Is that Elon Musk more impulsive? I don't know. They're vying for the top spot there, I guess.
So in the art of the deal, what's the deal though? That's the question. What does Trump want from him, and what does he want from Trump at this point?
One thing, we're going to have Mike Johnson on, the speaker. I think that Elon, he took it so far with the impeachment and the Epstein stuff, that any valid points he made about the big beautiful bill are kind of on the back, right? And it sort of undercuts his whole argument there, which was an effective argument, because there should be more spending cuts probably, but now everybody's talking about about Epstein.
It's a little bit kryptonite to use that in your
Kryptonite, yeah.
Yeah.
But we'll talk all about all this with we'll miss you for that interview, but Mike Johnson's going to be on, Andrew.
I'll be watching, my friends. I'll be watching, Becky and Joe. I'm looking forward to it.
Okay.
Thanks, Andrew. Joining us right now to talk more about Tesla is Gene Munster, Deepwater Asset Management managing partner. And Gene, there was a massive and hard and fast sell-off yesterday. A little bit of a rebound this morning, up by about 5%. But you're talking about more than $100 billion that was sold off instantaneously as this happened. Was that an overreaction in your mind, or was it just?
Becky, I think it was an overreaction, and ultimately, Andrew really hit the pressure point on the head, and I just want to zero in on that. What's at play here is this treatment that Tesla, or Waymo for that matter, may have with the federal government, NHTSA specifically, in terms of making it easier for autonomous vehicles to become widespread. And this, of course, was the impetus for Tesla's move in valuation, $900 billion today. And that's why the stock is down, that's somehow put in jeopardy because of what happened yesterday. But my view that this is an overreaction comes from a position that ultimately I think that the president wants to do what is right for the country, despite I think all the personalities between the two and wanting to get a kind of one-upsmanship. I think that the president does want to do what's right for the country. And when you think about AI and this arms race, I mean, undoubtedly this is a new frontier in terms of global power. And the physical AI piece is one manifestation of that. And the most obvious example of that is going to be with autonomy. So just to kind of play this forward, let's take the position that Trump is more punitive to Elon. It makes it more difficult for autonomous. And then we look around and we see autonomous vehicles in China everywhere. I'm fast forwarding 1, 2, 5 years from now. And in Europe and the rest of the world, it would be a little bit odd, I think, for this personality blow up to really slow down that pace of innovation. And so ultimately, I think that what is best for the country is for autonomy to move forward. And I think that means that this is going to continue to move forward. Obviously comes at a big time with Tesla next week and what we're going to hear from Austin.
Gene, I think really looking through it, though, there were questions that people were trying to get to immediately. The government contracts, the permissions that he needs, not only for autonomous driving, but for anything else he wants to do down the line with robots and other issues, for that to get kind of rolled out. If you're sure that this is an overreaction, would you be buying this today? Are you buying this stock today?
So I own Tesla personally. I'm going to continue to own it. Ultimately, is that this robotics, the government piece, is really important for SpaceX. It's really not important for Tesla. I think that the implications in terms of what happens with Optimus and the government being a big buyer of Optimus, I think is small to the opportunity within industrial robotics. And so, yes, I am a buyer here. I'm a buyer in part because I think that on the margin, while the robotaxi rollout slow initially, starting to gain some momentum in Austin, it won't be perfect by any measure, but I think it will speak to a very simple truth, which is autonomous vehicles are safer and people do prefer them. They don't like actually talking to their Uber driver. They do prefer autonomous. And so I think that as we kind of play this forward, I believe that that's more than $1 trillion opportunity. And again, the stock just below or just around 900 billion in market cap. I think that there's still upside. So at the end of the day, there is this other rift. It's worth mentioning. I think the pressure point is around legislation, around moving autonomy forward. There is this impact that Tesla has been benefited from Trump supporters buying Tesla vehicles, and what happens. And the last piece, Becky, before we kind of really wrap up, there's one other piece about the conversation that I think should be brought up, which is this goes. What happened yesterday does go beyond Tesla. It goes beyond. I think it really hits the broader big tech, who's been a huge investment in Trump. And ultimately, what does that mean for what happened yesterday mean for the likes of Jensen and Tim Cook and other CEOs who've been working hard? They're not the personality of Elon, so they're not going to probably have this kind of rift. But it is, I think, just a reminder that that they really need the president, and we have some big decisions around regulation that are coming up that are going to impact mega cap companies.
Yeah, you bet. Gene, thank you. Gene Munster.
Thank you.
Coming up, House Speaker Mike Johnson going to join us for an extended interview on take your pick. The big bill, the big beautiful bill, the big beautiful feud, Elon Musk bomb throwing, and much more. Stay tuned. You're watching Squawk Box on CNBC.
You download Dave.
President Trump publicly feuding with Elon Musk over the White House's big bill. NBC News reporting that there are no plans for Trump and Musk to hold a phone call today, as had been reported earlier. A White House official says Trump is not interested in a call with Musk. The Tesla CEO trained some of his social media fire yesterday on our next guest, House Speaker Mike Johnson. And Mr. Speaker, thanks so much for joining us this morning. What a day! What a 24 hours! What a year! What a life! But I don't know. We were going to talk about the bill, obviously, but can we at least touch on this and what you know? I thought you were supposed to have a conversation yesterday with Elon. Did that happen, or was it just text?
Well, we exchanged text messages yesterday. I spoke with him at length on Monday, and that's why the kind of the blow up that happened this week was very surprising, disappointing to me. We had a very friendly conversation. I really like Elon. He's a friend. I've come to truly respect his acumen. The Doge effort was heroic, patriotic, helped us find a lot of savings and abuses that Congress was not able to uncover previously. So huge contributions. And look, we can have policy differences. We have that here in this building, every day, but it's not personal. It shouldn't be personal. I don't tell my friend Elon I don't argue with him about how to build rockets, and I wish he wouldn't argue with me about how to craft legislation and pass it. But we've had some good discussion. I thought it was helpful, fruitful, but it's just disappointing. I hope it all resolves today. Look, these are two titans. I respect them both. I'm of course a huge fan and supporter of President Trump. I was with him in the Oval Office yesterday afternoon when some of this was unfolding, and he was disappointed. I was disappointed. I just hope it resolves quickly for the sake of the country.
Oh, Mr. Speaker, one of the points that the president made early on yesterday was that Elon was intimately involved with what was in the big beautiful bill, and was well aware of it. If there are shortcomings in terms of, and you've had to deal with your caucus. I don't know what's possible. I don't know what's possible in the Senate, but we're all well aware of the obstacles to getting a perfect bill. And I think Elon Musk, you must have had those conversations with him, so he was familiar with it. Suddenly, the hyperbolic language he used to describe the bill even last week, where did that come from? And what do you attribute that to?
I really don't know. I mean, the point is well taken. We worked to craft this legislation over about 14 months. I mean, we began this in March of last year, working to craft a reconciliation package using 11 different committees in the House. They each worked in their area of jurisdiction and developed that policy over months and months of long discussion and deliberation and finding consensus on it. And so each of the committees came out with their individual pieces of the large reconciliation bill over a series of months and weeks. I mean, all this text was out in the public. Everyone knew exactly what we were talking about. There was nothing done under, late at night other than a long session to get to the final vote, and that's because the Democrats tried to stall it in the Rules Committee. So, look, everyone had plenty of time to review and digest what was in the legislation. I'm sure Elon knew what was in it as well. And look, the American people are sort of caught up in the drama of this, but I don't think at the end of the day, tweets and social media posts really determine what's the most important to the American people. I think what they're concerned about is what we all promised on the campaign trail, what President Trump was elected to do, the mandate that we got by 77 million popular votes, and that is to make sure that border is secure, to rebuild our military-industrial base at a very difficult time. That's the only new spending in this bill. The rest of it is securing historic tax cuts for the people, making the tax cuts permanent, having a pro-growth set of infusion into the economy, jet fuel to the economy, which is what this bill will provide, and at the same time, a historic level of savings for the American people. It's a fiscally responsible product. It is the first in a series of steps to get us back on a sound fiscal trajectory. And I think, Joe, it's a very important message for us to send to the bond markets, the stock market, investors, job creators, entrepreneurs, risk takers around the world, and here, of course, in the U.S. economy. The Congress is serious. We have steady hands on the wheel. We're going to address the debt problem at the same time as we are making the economy work again. We can't wait to get that done.
Speaker Johnson, this week, Elon's one thing, but you do have to get through the Senate. And this week we have a series of senators who have come on this program to talk about their concerns with the bill, including Ron Johnson and Rand Paul, who both have said they will not support the bill in its current status because they think it adds trillions of dollars to the deficit. Their words, not mine, no matter how you want to spend this or how you want to do the math. Obviously, it's different depending on the growth prospects that come to it, but these are two senators whose support you need. who are saying they will not give it at this point. What's happening in the Senate? They also have support from others like Rick Scott and Mike Lee. Do you know where things stand and how you might be able to wrangle some of the Republican senators on that front?
Listen, I love Rick Scott, Mike Lee, Ron Johnson. I mean, they're good friends. We have lots of discussion about this. We are all deficit and debt hawks. We're concerned about the fiscal trajectory of the country. The national debt is the #1 national security threat. We have to address it. But here's what I think Ron is missing in all of this, is he'd like to cut, $8 trillion overnight, some huge figure like that. So would I. We don't have the votes to do that. And if you did that quickly, it would actually do real harm to the U.S. economy. So we have to do this in a step-by-step sequence of steps. Look, I liken this to an aircraft carrier. Y'all have heard my analogy. I mean, we did not get in this situation overnight. The U.S. economy is like a large vessel on the sea. You don't turn it on a dime. It takes a mile of open ocean. But this is the largest turn on that wheel that we've had since I've been alive. I mean, this is the largest cut in spending that any legislative body on the face of the earth in all of human history has ever achieved. We did that by a long, deliberate process of getting everyone there. Remember, I have a very diverse Republican caucus. I've got people from very different districts across the country. They all see the same problem set with different lenses. And I've got to concoct 218 votes, currently 217 votes, to get something across the line. So we did that. We reached equilibrium. We achieved this massive achievement with the package. And I told my Senate colleagues at their lunch Tuesday, 2 weeks ago, 2 days before we passed the bill here, that listen, remember that I'm crossing the Grand Canyon on a piece of dental floss, okay? I've got a very delicate balance among all the interests, and if you load it up with too many changes or modifications when it comes back over, then we're not going to be able to balance that. So I've encouraged my friends to put their fingerprints on it, but do it as lightly as possible.
We had Senator another Johnson. That's a very common name, so I think the most common. But we had Senator Ron Johnson on a couple days ago, and I'll tell you, you're friends, you like him, and you listen to him. He can make a pretty compelling case for 2 bills, and he says, well, all I want to do is get back to pre-pandemic spending levels, and there's no one who doesn't sit there and go, what are we doing? Where we had a $600 billion deficit, now we're stuck at $2 trillion. I don't even know how that happened. So you're nodding, and I'm nodding and going, yeah, that makes sense. So do the easy part first, extend the tax cuts, and then go line by line in the second bill. But I just saw something. You'd still have the same caucus with that second bill, wouldn't you? So whatever constraints are on you and obstacles that you have right now, why wouldn't they rear their ugly head? And in the Senate, you'd have the same problem in the Senate. So you're basically dealing with what you can, with the hands that you've been dealt.
That's right. And the reason I advocated for the one bill strategy from the very beginning is because I know my team here, right? I mean, the job of the speaker in an era with razor thin majorities is that you've got to know your members, and you got to know their districts to a granular level so that you can build that consensus that's necessary to get the product delivered. And we've been doing that here. And I told my Senate colleagues, it's much more complex in the House than it is the Senate. I know they have the same debates, but I've got more than 170 additional personalities and districts to deal with than they do, right? So it's a complicated balance. But everyone here wants to reduce spending. All of us want to return to pre-pandemic spending levels. I mean, we do, but you have to do that in a sequence of events. We have a plan, okay? This is the first of a multi-step process, as I mentioned. We're going to have another reconciliation bill that follows this one, possibly a third one before this Congress is up, because you can have a reconciliation bill for each budget year, each fiscal year, so that's ahead of us. We're also doing rescissions packages. We got the first one delivered this week from the White House, and that will codify many of the DOGE cuts. There'll be a series of those that come along, and we have the actual spending bills, the regular appropriations process upcoming, where we will spend less money. This is the team that will deliver and return us to fiscal responsibility, but it takes us a little bit of time to do it. Yeah.
What are you hearing from your colleagues in the Senate that it's likely about SALT? I mean, you've got your own issues with your caucus. I mean, Susan Collins and Josh Hall. What are you expecting to come back? What are going to be the priorities for what the Senate changes? And then when it gets to your guys, how big is your hat with the rabbits? How many rabbits are in the hat that you're always dealing with, Mr. Speaker? You got a few left in there?
Well, look, it's a lot of prayer and patience that delivers this. I wish I had a magic hat. They've written my eulogy about 10 times, and they've discounted our Republican majority, and everyone said we couldn't do all this, but we keep delivering. And the reason we do is because I spend a lot of time listening to everyone, taking in their opinions and their preferences, and at the end of the day, we find that compromise. The SALT part was a big piece of this, right? It took us about a year to come to that equilibrium point. We were able to get it through the House. And I understand my Senate Republicans over there, my dear friends over there, they're all from red states. You know, they don't have a lot of tolerance for that. They don't like it. I'm from a red state. I'm not in love with the idea of a higher SALT cap either. But I told them the reality is our majority in the House Republican Conference runs through states like California, New York, and New Jersey. They're not red states, but my team members who win in those districts are critical for us to maintain the House majority. If we don't get this bill passed, not only are the American people going to have the largest tax increase in U.S. history descend upon their heads at the end of this year when all this expires, but all these other pro-growth incentives in the economy won't happen, and small business owners and job creators and entrepreneurs will not expand their businesses, wages won't go up, the job participation rate will remain low, and inflation will continue to increase. We won't have the solutions, but also remember, if we don't deliver on this, and we don't deliver a little bit on SALT relief, then we're not going to have the House majority. And if we lose the House majority, the Democrats take over, they will impeach Donald Trump. I would forecast probably on the first few days of the new Congress next January, and January 27th, and everything will go to chaos. So this team has to stay in power. This team has to stay working on our plan to get our fiscal trajectory back. And it all begins with the one big beautiful bill. So that everybody who is criticizing this is playing with fire. We have got to deliver this product. We promised the people we would. I think we will by July 4th.
Very quickly, one of the questions that's been asked about Elon Musk falling out and the potential for other business leaders to potentially take his side. I don't know if that would happen or not based on some of the things he said yesterday, but you know, Elon Musk thinks he helped get that majority elected. Do you agree with that?
Elon was a big contributor in the last election, but this was a whole team effort. I mean, President Trump is the most consequential political figure of his generation, of modern American history. He is the one responsible for that. But we all worked hard. We delivered the House majority. I traveled the country nonstop. I did over 360 campaign events in 250 cities and 40 states, and I logged enough miles last year to circle the globe 5.5 times. I mean, I contributed to it as well. All of our House Republicans did. They worked so hard, and we delivered for the people. And we made them promises, and that's what we're fulfilling in the one big beautiful bill. Everybody needs to remember the reason we're using reconciliation is because it is the way around the 60-vote threshold. You only need 51 votes in the Senate. If we don't do it in reconciliation, reconciling the budget and saving these costs, saving money for the people, then we've got to do regular order. And Chuck Schumer and the Democrats are not going to help deliver the America First agenda. So all these big campaign promises we made will be jeopardized if we don't get this thing over the line and we don't do it quickly.
Yeah, I mean, he got elected in 2016. It's close in 2020, obviously, and the whole, I mean, for lack of a better term, the whole MAGA movement predated Elon Musk. He kind of joined the movement to everyone's surprise, so that doesn't make a lot of sense. When it comes back to the House, Mr. Speaker, would you rather have, who are you more worried about, your hawks or the parts of your caucus that are in those districts that voted for Kamala Harris? Who do you think you can convince easier? Whether would you rather have more cuts or fewer cuts when it comes back to you?
If I were king, I would make massive cuts to the federal government, but I'm not. We're in a deliberative body, and it's designed to work slowly.
Yeah. To get it done, what would you prefer?
Well, to get it done, look, I have equal concern among all those caucuses and subgroups because they all have a big say. And when you have a 3-vote margin, you got to treat them all with equal weight, and I do that. So we'll see. We'll navigate it. We'll thread the needle, no matter how small. But I'm encouraging my Senate colleagues to try to make that as easy as possible. Don't complicate it for us.
I'd hate to say that this getting these two gentlemen back together is your responsibility. That's overstating it, and I don't want to put that on you. But if anyone can do it, maybe it's you. And you got to do all these other things too, Mr. Speaker. But hey, you wanted to be Speaker, didn't you? Do you still want to be? You think about
I never did one. Look, I'm a wartime speaker. Okay, everybody says you having fun. Fun? No, but we're gonna get the job done.
All right. Once again, great having you on, especially today. We got we have an employment report coming too that we didn't get to talk about, but next time. You can come on every day if you want. See you later. Thank you, Mr.
Right after a break, the number of the morning, the May jobs report. We will get the numbers when Squawk Box returns.
Buzz.com.
All right, welcome back to Squawk Box. This is CNBC, and we're watching what's happening with the futures ahead of the government's jobs report. Right now, it looks like the Dow futures are up by about 155 points. S&P futures up by 25, the NASDAQ up by 100 points. If you've been watching for the week, we're actually up for the week to date for all three of the major averages. Treasury yields have been lower this week. There was some concern earlier this week when the ADP numbers came in weaker than expected, 37,000 versus the 125,000 or so plus that had been anticipated. Treasuries are, for the 10-year, yielding 4.41%, the 2 years at 3.94, and the 30-year at 4.89 this morning. It is almost time for that May jobs report. Rick Santelli is going to be covering that for us. But again, Rick, a lot of questions around this, particularly after those weaker than anticipated numbers for the ADP report that came earlier this week.
Absolutely. Now, ADP doesn't necessarily correlate highly, but it's something to pay attention to. 139,000 jobs created on non-farm payrolls for the month of May, a smidge higher than we were expecting. And in the rearview mirror, well, there are some revisions. We lose 95,000 over the last 2 months. All right, let's proceed now with the unemployment rate, which remains at 4.2%. If we look at the earnings from a month-over-month perspective, it comes in up 0.4, up 0.4, much better than expected. We were looking for up 0.3. In the rearview mirror, at least up to this point, I don't see revisions, up 0.4 that would equal January of this year, which was the best read to find a higher read, you're back in August of last year. Now, let's look at average hourly earnings on a year-over-year basis. Hotter than expected, 3.9. That's a couple of tenths better we're looking for. 1/10 higher than the 3.8 in the rearview mirror. That equals the first 2 months of the year, which were the highest. To find a higher number, you're going to Dece of last year when it was 4%. Average weekly hours worked, and we want to always pay close attention to this. 34.3 is wild. It's the rearview mirror, it's the windshield, it's what we arrived at this time around this month, and that means we have 34.3s in a row, which is building. It was 34.1 and 34.2 in Jan and Feb respectively. Labor force participation rate, always a welcoming event. We want to bring more people in. It comes in at 62.4. This is a miss. This is the first real miss. That's a couple tenths light, both in the rearview mirror and against expectations. It equals the lightest read of the year, which was in February. To find a lower number, you're going all the way back to the last month of 2022. And finally, drum roll please, we're going to look at what I call U6, the underemployment rate, because the actual employment rate I already gave you at 4.2 is considered the U3. So U6 comes in at 7.8. That means that we have back-to-back 7.8s. The lowest read was 7.5. That was January of this year. Interest rates are moving up. Listen, 139,000 isn't off the chart strong, but it's stronger than the market was looking for. And even though you can say that we're losing a bit of steam on job creation, what you can say is that you cannot say that it's happening quickly. And you cannot say it isn't accompanied by a mixed bag of other economic fundamentals. Some point to slower glide path, some point to better glide path. Interest rates on the week, and this is important, a 2-year closed at 390 last week, so we're basically up close to 6 basis points. A 10-year closed at 441 last week. It's basically up 2 basis points. Pre-opening equities, they like this number. Back to you.
Rick, okay, thank you for wrapping that all up. Stick with us. We want to bring in some more people from our jobs panel. First up is Douglas Holtz-Aiken. He is American Action Forum president and former director of the Congressional Budget Office. Kenny Richards is senior fellow at Groundwork Collaborative and a former Treasury Department official. Sarah Malik is Nuveen CIO and the head of equities and fixed income, and of course our very own Steve Leisman and Mike Santoli. Steve, we'll go to you first. What did you see that really jumps out at you in this report?
It took me a while to find where the jobs were, Becky, because there's a whole bunch of negatives at the top of this report when it comes to the durable stuff and the manufacturing down 8,000, retail down 6.5. But the jobs were created where the jobs have been created. I'm looking here, just found it in the nick of time here. Healthcare up 78,000. I'm just about to get to leisure and hospitality up 48,000. There it is. So that's where the jobs were, and that's where they continue to be. Kind of interesting that you had that retail decline 6,500. Not a big number, but the question is whether or not how they're dealing with all the tariff situation. You did still have an increase in transportation and warehousing. That was up about 6,000. So that's a good number. Kind of up and down. To me, the revisions may be pointing the direction of the weakness that we're expecting to get. They were still positive numbers, but now we seem to be settling down into a lower run rate here on jobs. Still enough to put to people who are coming into the workforce to work, and that's why you have your steady unemployment rate. Looking at the work week, has been kind of steady at this 34.3 number, which is a bit low, but we'll take it, Becky. We're navigating a lot of confusion for businesses, and we're hearing terrible anecdotes from businesses, but not showing up dramatically in the jobs numbers.
Okay, let's dig at this from another direction too. Mike, we are seeing the stock movement at this point. Stocks came back a little bit. Rick pointed out that yields came a little higher as well. I guess the good news here is maybe the economy is stronger than we had been anticipating post-ADP.
Right, Becky, and certainly stronger than perhaps some folks were leaning, given some of those negative inputs like ADP. I do think it's pretty close to the sweet spot in terms of monthly job gains. Maybe you wanted even a little bit stronger to get a more emphatic equity reaction with downward revisions, but this is fine. It enables investors to kind of, kick their acute concern for a weakening in the economy ahead by several weeks, right? We're not seeing it in the hard numbers just yet. And that's probably important because the Federal Reserve has expressed no real interest in acting anytime soon. So if you have a wait-and-see Fed, you want the real economy to hang in there. Yesterday, the S&P was down about 0.5%. Half of that decline was Tesla alone. So today, you're in the equity futures, you're getting back all of that and a little bit more as the market, let's keep in mind, is up 23% in 2 months off that low in early April. So a rest would not be surprising after this move.
Doug, I guess the question it does beg, though, if the economy is stronger and if the jobs market is strong, you're not looking at higher unemployment. Is that really a reason for the Fed to cut rates? We've looked at the inflation side and said, okay, inflation has not been hot. Maybe the Fed could cut rates. But if you look at the unemployment picture, I guess the question is, should they?
I don't see the Fed cutting anytime soon. Most of this stems from the tariff imposition, and that's a second quarter phenomenon, and I think we'll see the evidence is we'll see the price increases in the second quarter. But I think the deterioration on the employment mandate is going to be in the third quarter. And so Fed's going to hold because the first thing they're going to see is higher prices. I mean, we've had studies out of the New York Fed, the Atlanta Fed, where they've talked to businesses in their districts, and the majority are passing along the tariffs as higher prices. And so that's going to show up quicker. That's what the Fed has to worry up front. Second half of this year, they're going to talk about cuts, but not yet.
Kitty, you agree that the second half of this year will bring job cuts?
I think that, as Doug was saying, a lot of the uncertainty that's created by the tariffs and other kind of chaotic management of the economy by the Trump administration is only going to start really impacting the labor market on a slower timeline. We are starting to see some of the softening. I hate to see the labor force participation dropping while unemployment stays steady. The revisions downward from the last few months are putting us on a trend for lower job growth, but a lot of the job cuts really come from those increased prices for inputs that are only going to start working their way through the system, and a pullback in investment due to the uncertainty of what's going to happen over the next few months. And that really takes some time to really impact the labor market.
Hey, Rick, who do you think is going to tell the stock market about the chaos if it hits new highs near term?
I think everybody will keep calling it that way, and anybody who has a 401k should keep their fingers crossed that they keep doing it. That contrarian viewpoint keeps fueling more upside. And I would like to point out something. With respect to this quote-unquote deteriorating job picture, the 3-month moving average of non-farm payrolls is 4,000 less than the 139,000 that we had today. So I just don't see that there's this, added negative impetus by all the headlines that are out there. I'm not saying that they're not all accurate, there's not uncertainty, but the market certainly seems to be much more adult about it than many of the analysts.
Why do you think the market snapped back? What is it? I mean, the market's not stupid. Maybe it goes back down and tests the lows, Rick, but what do you attribute it to? Just the level of skepticism and negativity? It was bound to happen.
Yeah, listen, your partners in business don't need to necessarily personally like you or think that maybe your last couple of traumas or outbursts are good. They just need to realize that you're their best business partner. The U.S. is the place to do business. The dollar is the currency to do business in. All the other issues, the emotional issues, the touchy-feely issues, we can put them on the front page of every newspaper, but the market isn't necessarily going to pay attention. It's going to pay attention to business, real business, which isn't driven by emotions, and it isn't driven by, gee, do you like me or not? They're doing business with us because we're the only alternative with the rule of law and all the other issues that many of the newspapers and the websites say have deteriorated, and I totally disagree, and I think the market does too.
Sarah, as an investor, what do you think about that?
Well, there's 3 ways this number is going to impact the markets. The first is the S&P going to 6,000. Second is how the Fed's going to react. And third is what's going to lead us, which is tech. So I think this is a relief for investors. The S&P likely hits its next hurdle, which is 6,000. We cross that and we stay there. Second is how the Fed going to think about it. It gives them a little bit of breathing room. They don't have to rush to cut rates, because what we were worried about is that employment markets tend to crack right when a recession starts. So if the Fed waits too long and employment markets show too much weakness, likely the Fed would fall behind the curve. Third is, what's led us out of the recovery since Liberation Day has been tech stocks. I think that continues to lead. We just saw Broadcom report last night. We're hearing basically that there's insatiable demand for artificial intelligence. I think tech continues to lead from here. And looking at this number, what's important is healthcare jobs coming in at 78,000. That's been a big leader for this number year to date. Every month we've seen about 60,000 jobs created by the healthcare industry. And that is an acyclical industry that shouldn't be impacted by tariffs. So that's a positive and should be a driver of the jobs market going forward.
Hey, Doug, what do you think about what Rick was just positing, this idea that it's okay long term, that we may be dealing with some cross currents at the moment, but that investors will still come here, businesses will still come here?
Well, I think Rick's right that people care about doing business, but business just got a lot more expensive with China, 30% or higher. We're on a pause with those tariffs. So,
He's our Republican
doing business
guest.
has gotten more expensive.
Where do we find you, Aiken? You're a Republican guest. We got Kitty on the other side. Hold up your end of the
I'm an
bargain.
analyst. You gotta, hey, you gotta do the numbers, Joe.
All
This
right,
is just
Rick,
about the numbers. That's all there is to
I
it.
don't think
That's
this is
why I went to Rick.
Finish?
That's why I went to Rick. It's like 4 against 1. Anyway.
But Rick is right about one thing. I mean, there's no question. The market's pricing the overall economy. The bulk of the U.S. economy is services.
I hope
What
you didn't
Steve
sell your
says,
stock.
yes, I think
I
he's
just hope
exactly
you didn't
right.
sell your stock
The
at the
good
low.
sector
Doug.
is-
I hope you didn't sell your
The
stock
good
at the low.
sector is deteriorating. The good sector is deteriorating. That's a concern. Services are hanging in there, and that's why I think it's the second half of this year where the weakness might show up.
And that's because you think the tariffs will still be on at the current levels at this point? What happens if there is some solution by July 9th? Go ahead, take that one.
No, that's a very hard call. I mean, at the end of 90 days, we have the pivotal moment when the president has to decide what he's going to do with the reciprocal tariffs, which in their original launch were a clear overreach and a very danger to the outlook for the economy. I truly hope he doesn't go back there, but I don't know what he's going to do. And I don't know what the courts are going to allow him to do, and so it's really hard to gauge that out.
Katie, I guess I would ask best case versus worst case scenario, and what you tell people about that.
At this point, I think the really important risk to the economy we need to pay attention to is what's going on in Congress. So I think we're absolutely right to look at the jobs report and see the strength in the healthcare sector. Currently, Republicans in Congress are trying to take millions of people's healthcare away and do it to... Yeah, I mean, that's going to be a real problem. There are analysts saying that that is going to filter through the local economies and cause job losses.
I think that was
going to be a
Rick
real drag on local economies across the country if that bill passes. And it's going to make it much more expensive to invest in clean energy, which is going to spike electricity prices.
Clean energy is uneconomic. Clean energy can't stand on its own 2 feet. That's why we have such big deficits. We want to pay for things that people don't want.
The tech growth that you're talking about, the artificial intelligence growth that we just heard about driving the economy, requires massive amounts of new electricity, more than we can create by spinning up new gas turbines over the next couple of years. We're seeing huge deployment of wind and solar at utility scale, including in a lot of red states, that is helping to bring down the price of electricity. If we don't continue that utility scale deployment, we are going to see electricity prices spike over the next few years just because of rising demand, and that's going to also be a real drag on economic growth.
Hey, Mike, what do you think from the market's perspective right now? I mean, you've watched kind of the ebb and flow, the up and down, the volatility rise on these things. What do you think the next thing that we'll be watching for beyond this jobs report?
Well, look, I mean, we have the brute force of massive technology company earnings growth that are partly supporting what we've seen in the markets. What the market does is it kind of processes, uncertainty and policy flux into, okay, let me get the weight of the evidence probability for how things are going to turn out here for the private sector. And for now, it's seeing a pretty steady as she goes economy at the moment, with maybe a little bit of downside to some earnings coming down the road. But here's the thing. the stock market got to 6,000 like 7 months ago. We've had two quarters of really good earnings growth from there. Credit markets are great. The rest of the world stock markets are making highs. Everything seems like it's fitting together at the moment. So I don't think you have to jump through any hoops to say there's something extraordinary going on, that the market is managing to do pretty well right here, all things considered. So, you know, I think that if there were going to be negative impacts from policy, we just don't know them yet, or they haven't hit yet. And so I think that's why the market is reserving judgment on that.
Steve, I'll ask you finally, just in terms of the numbers, we keep saying, okay, this is the one that could show us any of these concerns. This is not that number. Does that mean it's not going to come? Or do you think it comes down the road? What's happening here?
No, I mean, I think when I hear the Republican or conservative side of the argument at the table is that we're going to have a massive tax increase on imports and there's going to be no economic effect. I just find that hard to believe. I think there is going to be an effect. How big an effect, I don't know. I think that the report was a reasonably good one. I think the downward revisions that you had to the prior months tells us there is brewing weakness. You did have a bit of a pop in jobless claims, a bit of a pop in continuing claims. I do think it does show up. You've had a lot of uncertainty. Maybe what's happening is people are waiting before they make any rash decisions when it comes to their employment. You have the same kind of employment that you had in the previous administration, which I would point out the current administration complained was not good employment. So you have essentially healthcare and leisure and hospitality. You do have 22,000 lost in government. I think it is still to come, Becky, but maybe not as much as we had thought, because businesses find a way to adjust. I would just reserve judgment and not give the all clear signal just yet.
Who's we? So Rick, you got any final thoughts? I got a guy here. You chortling in the background.
You know what? I have final thoughts. Here's my final thought. Anybody who talks from bullet points or talking points, you know, toss them away. Here's the only bullet points I like to use. It's the market.
I'm not talking
Quantitative,
bullet
things I
points,
can
Rick.
put
I
in
don't
a
know what you're saying
calculator. I'm not talking about you. I didn't talk. Did I say Steve Leisman? Okay? When I hear that we're kicking people off health care, you know, people need to do better research on exactly where we're going, where we've been, and in the past, how we've arrived at various functions between welfare and entitlements. You know what? We can't afford to continue to help people that don't really need the type of help that some of the bullet points say they need. Because if we keep doing this, folks, and this is important, we won't be able to afford to help anybody.
All right, folks, thank you to our entire jobs panel, Doug, Kitty, Sarah, Rick, Steve, and Mike. We'll see you guys later.
Coming up, much more on what the new jobs number could mean for the Fed and its deliberations over interest rates. After a break, former St. Louis Fed President James Bullard is going to join us. Stay tuned. You're watching Squawk Box on CNBC. Join us now on the Fed and the latest employment report, which showed a gain of 139,000 jobs. Former St. Louis Fed President, I'm going to call you James Bullard now. I know you like that because that's formal. But then when I talk to you, I'm going to call you Jim. That's going to work.
Okay.
And now you're Dean of the Mitch Daniels School of Business at
Indeed.
Purdue University. We love him too, and he's been a frequent guest.
Yeah.
I can't, I know there's a lot to worry about, Jim, but another decent number here for jobs and inflation. Maybe it's coming, but we haven't seen it yet. Are we in a pretty good place in your view?
We are, and I think this cements the expectations that the Fed would be on hold until September, and then I think at that point they could make a judgment about whether inflation is continuing to come down. I think my former colleague Chris Waller probably has it about right. If inflation continues to come down, which is what happened in the last trade war, then the Fed would be in a good position to probably lower the policy rate a little bit in the fall. But they don't have to do that. And really, when you look overall at the big picture, unemployment rate in the low fours, upward sloping yield curve, it's and inflation coming down 2.5 on the Dallas Fed trim mean coming down. It's all pretty good from the Fed's point of view.
Can you explain why Can you explain why the sun keeps coming up every morning with tariffs, Jim, and with the way that they're covered by most of the mainstream media?
Well, I do think it's a global game, and certainly the last trade war with China in particular did slow down the global economy, and I think there are some effects there, and so people are looking for that. I do think that the news has been, from a macroeconomic perspective, has been better on tariffs because this 10% across the board tariff looks to me like it's not going to pass legal muster. So from a macro point of view, that's probably good news. I know there are other ways to put tariffs on, but they're more temporary, they're more targeted, which is probably what a lot of macroeconomists would say is a better approach.
How concerned are you with the details of the for lack of I mean, everybody calls it the big beautiful bill, but how concerned are you about the deficit implications for that, Jim?
There are, of course, it looks horrible from a deficit perspective, but I would interpret this bill as being more or less business as usual. So the news about fiscal deficits being bad is not really news. That's something we've known for a long time. And so they're continuing that policy. It's sparking a lot of debate about how wise that is, and that's a great debate to have. But I think from a macroeconomic perspective, it's sort of business as usual. That's why markets are able to shrug this off and say, well, that's not really anything different from where we've been.
When you said you thought Waller had it right, do you think that if we do see a rate cut, would you call it a good rate cut? In other words, because inflation's lower, or do you expect it to be because of a growth concern rate cut?
No, I think inflation would come down a little bit, and the committee thinks that the policy rate is somewhat too high for, it's a little bit above neutral. Why is that? It's because inflation is still above target. So if inflation continues to drift down, and again, that's what happened in the first half of 2019, last trade war. By the time you got to the summer of 2019, the committee was able to lower the policy rate a little bit, and that put the U.S. economy in pretty good shape by the end of 2019. And of course, then the pandemic came on and everything. I do think that that's probably the baseline here still. Okay. But other things can happen, and why not wait and see?
Oh, great. James Bullard, thank you. And whenever we can, we'd like to have you on, especially on days like this. We appreciate it. Thanks.
Happy to do it. Thanks.
Okay. Swap up the right back.
AI meeting agent.
All right, welcome back, everybody. Let's take a final check on the markets this morning. Things are sharply higher now. Dow futures up by about 300 points. You've got the S&P futures up by 45 and the NASDAQ up by 180. That came after the payrolls came in better than expected, 139,000 versus about 125,000 that had been anticipated, but also much better versus the down numbers that we'd seen with ADP earlier this week. Have a great weekend, everybody. We will see you back here next week.
Friday.
It is Friday. Right now it's time for Squawk on the Street.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures do spike on another solid jobs print. 139,000, slightly ahead of estimates, some negative revisions. Unemployment stays at 4.2 for the third consecutive month. VIX is near a 4-month low. Our roadmap begins with the May job surprise. Hotter than expected. Futures rally ahead of the open.
Plus that Trump-Musk bromance breakup, and oh, what a breakup. The president and the world's wealthiest man, very public words on social media. Tesla shares are looking to rebound after they had one of the worst days ever. And, well, tech is the biggest winner on the S&P this week. Microsoft, in fact, amongst the big names that are hitting all-time highs. In fact, that is its first in nearly a year.
Let's begin with this feud between the president and Elon Musk. Their differences over the Trump tax and spending cuts bill extending into those back and forth posts on social media yesterday about other issues too. According to NBC News this morning, White House Chief of Staff Susie Wiles says there are no plans for a call today between Trump and Musk, and that refutes a report by Politico which says otherwise. ABC, John Carl-Jim got him on the phone. Trump said he's not interested at this time in talking to Musk.
Well, look, I think that we always speak in terms of cards because of the Zelensky craziness. And I don't know. I think that Musk has a lot of money, but I do think the president has the cards. David, you studied Musk. A lot of what Musk does is offer a superior product to governments worldwide. But a superior product doesn't necessarily win if you don't want it to. You can put your finger on the scale, and I think that there's too many. He's way at risk here, dealing with a president who is not necessarily, who kind of has a very close relationship with the Justice Department.
And not to mention is quite vindictive when it comes to his enemies, certainly, or perceived enemies. Yeah, Jim, I mean, obviously, along with everybody else, I just kind of watched in wonderment, not necessarily fully surprised at what we saw yesterday,
No,
although
right.
when you go Epstein, it's not clear to me you ever come back from that in terms of repairing a relationship, as that was one of any number of different posts from Mr. Musk in terms of really attacks on the president, and obviously there were rejoinders as well. He's got a lot at stake. Elon has never shown a willingness to back off, ever. Never once. He made that clear in the interview we did 2 years ago, of course, where he famously said, "I don't care."
Right.
And he has proved it every day since, whether it's alienating a certain part of his potential buyers for Teslas by being so political in many ways, and so many other ways. But this one is a sort of a somewhat unique challenge he's taken on because, to your point, whether it is Tesla and mileage standards from which it benefits, by the way, because remember it sells its credits, they get a lot of money to other automakers that need to meet mileage standards. That may go away, or may very well go away. Whether it is getting nationwide rules for autonomous driving. I mean, when I was in Austin a couple of weeks ago, the Department of Transportation Secretary was there with me. And they were meeting and talking about those very rules as Musk gave him, there's Sean Duffy, a tour not just of the plant, but of the cars as well. So relying on the government for that. EV credits, obviously, which are going away under the big, beautiful bill. Relying to a certain extent on that as well. And then you get to things like NASA. You just go on and on. And to your point, Jim, it would seem that it's not necessarily rational to pursue at this level of vitriol what Mr. Musk is currently pursuing against the president.
I think that's right. I think that if you own Tesla, you own this fight. Now the analysts can't find anything wrong with what he does. And I didn't read anyone who just said, you know what, I liked it, but I didn't know this guy is just one hell of a crazy guy. I think everyone has accepted his craziness and liked it. I don't think you can. I think that you said the key thing, David. You used the term
there's an executive I know that is linked with this, and I don't have it to the point where it's in front of me from the Justice Department document, but I could have used it, and I said I can't. I mean, I talked to a number of people. I went to lawyers. I went to people who are involved with ethics, and they just said, "Look, Jim, I know you know it, but you can't mention it." And I feel, Carl, that's the bridge too far. Everything else, it's a spat. Mentioning Epstein is to say, I'm going to take you down. I think that the problem with Elon is he's like a strap a bomb to your leg guy. I mean, I think that I don't care, means in part that, okay, cancel everything. I don't care. And with the idea that, what does he do? Does he just give millions to Democrats who run against Republicans?
Well, I mean, the line about decommissioning Dragon was a signal, Jim, of how reliant the government is now on what some call oligarchs. You mentioned the street today. Adam Jonas does reiterate 410, but says he's prepared for the stock to give up more. By the way, Adam has an 800 bull and a 200 bear case. Right. And then Goldman does trim some delivery numbers.
Right, well, look, I think that Adam, that's a this. This is just different.
This is different.
This is different.
And I mean, to the point Carl made, canceling Dragon, which is the main way that NASA gets access to space. Now, he did, I think, walk that back a bit later. You know, Jim, if you are, obviously Tesla is the main public way, but there are plenty of investors in SpaceX, XAI as well, talked about many times, which also includes, by the way, X, the former Twitter. If you're an investor with Musk, you knew this. Again, I go back to 2 years ago and his behavior since then, in terms of at least understanding the risk you are taking that comes with all that reward because it's Elon Musk and look what he's accomplished. But do you have to take another look at it and just say,
I'm saying yes.
I don't know if I can own Tesla.
I'm saying yes.
Is he willing to really blow it all up?
Well, I just think that there's, as between Tesla and 499 other stocks, I would tell you that I can't sleep at night with this now. I mean, I can wake up in the morning and the guy can say I've been thinking about it and I'm pulling out. And what does that mean to all these private venture people who own it? I mean, it's a one-person company.
Well, Tesla is not. I mean, I don't think of it that way.
Well, no, I think that I think people are buying him.
Yeah. Well, it's the way through the public markets to get access to Musk. And obviously the promise of autonomous vehicles and the promise of robotics, which are the two areas that he is most focused on. Not on the delivery numbers that we will talk about and that can still influence the stock price on a daily basis.
Well, I think
but again, you need the government as your partner in some way in so many of these efforts that, you know, he said again in the back and forth yesterday, well, Trump's around for 3.5 more years, I'm around for 40 plus, but 3.5 more years can take a lot of damage, Carl.
Look, I'm thinking about what Biden did when he decided, look, we're going to put a pause on liquefied, on LNG. Okay, let's put a pause on a pipeline. And that ended the industry. It just ended it because there were so many projects that were canceled. Most of them, many of them have not come back. I just think that President Trump, vindictive, could say, you know what, I've decided that I don't like self-driving autos that rely on vision. I think that ones that rely on maps are better. In other words,
well, LiDAR and radar, right? I mean, he could basically say, we favor the Department of Transportation favors Waymo.
Yeah, and then what? Then you own something. I mean, I love the self-drive. But if I know the president can take, and look, I care more about the president than Musk. I think Musk is going to do what's right. I just now think that
what's right?
Well, you want self-drive. You want to get good self-driving. You want to have the best technology. What I'm saying is that I don't think the president necessarily. I think you could say Waymo's good, and I don't want to do the other. And then what happens? Then I lose the main prop of self-drive, which I think is so important.
There's also, Jim, we haven't mentioned China. Navarro today says first talks should happen within 7 days. But some argue this removes an ability for the U.S. to have a power play against China when those talks do resume.
Well, everything is, geez, I keep coming back to the rare earth and how it's going to start shutting down the autos.
I'm here.
You know what? You know when this thing started? it was when he made fun of Peter Navarro.
Calling him dumber than a sack of bricks.
Yeah, and I think that he forgot that Peter Navarro, rather than talk negatively about the president, went to jail for the president.
No, that was the first of sort of
I'm here.
outward attacks on his platform against a member of the administration.
Yeah.
That said, my understanding is
Oh,
Musk's
big old
frustration really began much earlier when Sam Altman showed up at the White House that first time to announce Stargate. Remember,
Big bounce.
Altman and Musk are at each other. They are still involved
Yes.
in serious litigation. By the way, serious for OpenAI as well, of course, which is the home of ChatGPT.
Oh boy, they're wrong again about the employment numbers.
Litigation that's been initiated by Elon Musk around
But do you
so
agree
much
with me
there.
that-
Then when the UAE announced the Stargate deal and
Earnings
Musk
are
sort
up.
of parachuted in, my understanding is the administration was not particularly happy with that. Susie Wiles, the chief of staff, may not have been particularly.
Oh, shut up with your unhappiness. We're sick of it. You've been wrong. Get on there and say it. 598.80. So we got 65 cents to go. Well, good morning to you. How's the room doing? Oh, who's that chick with Donald Trump? Good morning, Randy. Good morning, Link. Good morning, Magnificent. Good morning, Richard, Ricky, and RTP. Well, it's time to take out the chicken soup. I forgot to do that. Or should I just go out and get something to eat today? I think it's a good idea. Maybe just go down and get a salad, chicken salad, today for lunch. And we'll make me some jasmine tea. Morning, Robert. I'm here. And everybody else on YouTube. See if today's support will hold. 597.60. Yeah, I'm here. See, these idiots won't stop talking about Musk today. They're going to try to get him on his side again. The knife yesterday was just like a gift. If you're in any trades, I would have added on for sure. I talked about that yesterday. I said, this is hogwash. Okay, I'll take off my wet shoes. I'm just looking at us to see if we double top, hit 598.80, and then pull back. Trump's not interested in talking to Musk. I think he pushed it a little too far, Musk did. One, you don't talk to the president like that unless you're Joe Biden. So, if I was to ask who won yesterday, I would say it was Trump. By a thin margin. But I still would say he won. God darn rain, man. I'm sick of it. We've had at least 8 times more than what we're used to. Morning, Angel. Morning, Link. Rookie. Good morning, Sheba. Time to clear up my I think I will turn on the air just to get some fresh air in here. I think today's, well, there we go, man. What time is it? 19 minutes. Well, we just hit resistance, 598.80. We just hit resistance there, Randy. Again, they're wrong about the job numbers. I think they're totally wrong about this. For one, the human trafficking that they're all in love with. Open borders, Wall Street. I think they're wrong about that. I think they're wrong about the government's excess spending that they love so much. All of a sudden, now they want to be tightwads. I don't fall for that one bit. All of a sudden, they become deficit hawks. I don't believe that one bit. They don't give a crap about it. Or they would have said it years ago. Jimmy has his hot chocolate. I'm going to put on some aromatherapy in here. I think they're wrong about keeping interest rates up at a high level. I think Jay Powell's doing a shitty job. I'm definitely going to wait for 598. I'm not going to jump in this spike. Again, don't be fooled. The unemployment numbers were good. All week they talked about how bad they were going to be. I decided to start the day off with a hot chocolate. I have to go outside and get my oranges. It was very humid this morning. Now we have that rain. Thundered all night. Spy hit my resistance. The girls are having a stupid internet fight. Tell them to call me. Good morning, Michelle, the sweetest person in the whole wide world. And missed out on some good beet juice yesterday. Might take me a couple tablespoons of it. Woo! There's our first pullback. Let's get her on back down to 597.60. Well, Livid, I haven't determined if you're a female or a male yet. If you're a female, I'd say you're sweeter. What is your pronoun? What is your pronoun? we all got them. No, you're not shit, Michelle. Oh man, I love hot chocolate in the morning when it's raining outside. We got 4 more minutes left. And do I have my platforms ready? Nope. Well, yesterday we learned a lesson. I'm going to change my shirt. Get something a little bit more silkier on. Well, well, well. Time to set up my platforms. I do have NVIDIA, so I got to see how that thing turned out. Well, them puts would have been a very good payday yesterday if I'd have bought them. I was wanting to, but I didn't do it because I already had two straight. Well, maybe I should have. I can't have 3 in a row go bad on me. Well, I might be winning on the video. We'll see here. Then I might not. Here, ooh, I am winning on it. And we're off to the races. Got a double top on the SPX. On the 1 hour with a tweezer. And support will be right here at the yin yang, right about there. So we got a whole 59.8604. Perfect. Golden sweeps coming in for NVIDIA, Robert said. I didn't even see him post yesterday. Well, we hit my resistance level. 59.98.53. Now we want to see a pullback. Okay. Tesla. Let's see if we pull back here. We've got a shooting star. Right now, I'm up on Tesla. I got 230 from yesterday. $345, $335 right now. Oh yeah, time to take profit. Get out. Oh, don't start in on me today. You would never think that I'd make money on that Tesla, would you? Say yes. We're at that magic number 6,000. Fudge. Bank of America new high. The unemployment numbers were great. There's the 600 off to the beach. Well, it's time for a pullback, let's have it. It's time to buy a put. Do I have the balls? Hang 'em on the walls. Time to buy a put. Your musical talent is just overwhelming, James. You should be in the Hall of Shame. Why is it you sound so much like Elvis? There's the inverted hammer. Better watch your girlfriend, I'll throw her in the slammer. SPX. Come on, Trump, let's get into a feud. I am looking at the 5980s or the 5975s. At $4.30. I'm on a jet plane, walking all over you. I'm getting ready to buy a put. This is June the 6th. Does anybody know what today is? And I have a trivia question. How many soldiers did we send over on D-Day? Can anybody answer it without looking it up? Thinking about buying a put. I'm going to buy a put. So hold on to your panties right now. There it is. No, not yet. 370, 380. Does anybody know how many soldiers we sent over on D-Day? Randy's very close. 75,000. According to Squawk Box. But you know they're always wrong. Come on, let's get in it. We've had a straight up climb here, so I'm going to jump in. I'm going to grab one at 370. I don't know if it's a good idea or not. If it ain't, I'll get right out of it. Huge risk. hugely. Right now I'm up $500, so I don't give a shit. We're going to take a risk. Always clean.
Hello.
Yeah, what's up, baby? Are you gay? Would you like to come over and have some premarital sex? So right now we're at 410. Was that a little bit too much there, Magnificent?
Affirmative.
Man, you're the coolest dude I know, Jim. Robert thought it was 80K, so we're in the crosshairs between 70 and 80. Okay, come on now. Let's not have another breakout. Let's have a little pullback to the VWAP. And I'm using the SPY here. I don't know why I got it on the SPY. Damn it. Thought I was looking at the SPX. That's alright. Oh yeah, that's... We're at the orb. We're at the 9 right now. I realized most of my friends in high school were liberals. %99 of them. So I'm at 410, 420. Let's get a big old knife here. 440, yeah. I want to exit. There's 430. 430, 440. And can I get 450? It'd be nice to get 470. Anybody take this put with me? If you did, you have balls. Take cash. Don't play around. It's true. It's true. Out at 4:30. And I got one left. Breathe in, breathe out. RSI is still hot. Let me know if you get out of the trade. That's not what I wanted. No, I don't smoke it no more. Tired of waking up on the floor. How'd that get there? No, thank you, please. It only makes me sneeze. It makes it sometimes hard to find the door. Okay, we're testing a double bottom here at 420. It's time to make a business decision, or we could drop to the 21,6004. There's 430 right there. This is right. Ooh, 440. I'm not going to play around. I'm going to sell this other one. There's 440. Ooh, 450, baby. 470. Ha ha ha. Okay. Say what? There it is. Exit idea at 480. 470. Good job, lunch lady. studio or are you out? Livid Goose, I mean. She, he. I think Livid Goose is a man. But in these days, you never can tell. Bullseye. So you seen how we traded that, right? We went straight to the moving average. Where's Funk at? Do 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 do. Nice beach trade. Now off to the beach. Correctamundo. $9 a.m. What will come in? Sneaky snake trading strategy. A beach trade a day will keep the collectors away. Correct? Volume will come in at 9 a.m. Oh, there's Sarah. Snooty ass Sarah. I'm going to show you who's the snootiest chick on Wall Street. I'm glad I don't listen to her. Got CRWV bounce from yesterday on that dip. Squawking the Street. Stephen Moran. Never heard of him. Oh, wouldn't you know? Two of the best friends alive. That chick right there is the snootiest chick on Wall Street. Oh, she got a little bump on her head. I'm not going to feel sorry for her. That could be bad. That don't look good at all. Is that a Band-Aid? Could be a herpes. If it doesn't hold the 21, I'm getting back in. We're a little bit almost. Tesla's dropped. Hickory dickory dock, the stock run down the clock. Get ready. We could make it back to my resistance line. Or even do a double bottom orb. We're now at 460, 470. Nancy, may I have a shot of vodka and the Valium? Nancy. I got an A+ from Studio. We're getting ready to squeeze. It's a descending flag. Ooh. We're waiting. We're on the 5 minute on the /ES on the 9. I think it's trying. There's the 1, 2, 3. Like. One, two, three. Slow volume. I'm attempting to get another put here. Market's been over 39 minutes. $3.60. $3.30. Supposed to do it, it'd be almost any second. Should have grabbed 330 right there, 340. Probably would have got 340. I'm gonna make my tea and I'll be right back. And now I think it's wait and see. Lulu had a big old sell-off yesterday. Almost too much. There they go too. Minute. There'd have been $100 right there. 340 to 440, 460, 470. Missed it. Should have got it. Oh. I don't have a 25th. Right now we're at the 50 SMA. We're flagging out again. think I found a guy to do my brush hogging. I'm gonna go up there this weekend and clean it up. I have to wait until it dries up. Every time it starts to dry, it rains. So that sucks. Oh. $3.80. Kind of just going sideways. Stronger than expected jobs report lifts U.S. equity futures pre-bell. Again, they were wrong. I thought they were wrong. Okay, we're at 360 here on the put. I'm gonna go get my tea. They're at 350. We're below the 9 of the 50 SMA now. And just broke out. So I'm about ready to jump in these things again. SPX 5975s. Let's drop. So the jobs never had them full again. June 6th, D-Day, strike 59.75 at $3.30. Now let's go ahead and just give it up. $3.50, $3.40. These things are at 380 right now. You had a chance to get them at 320. $370. There's your 380 again if you want to get out. $4, baby. Come on. Hello, my name's Donald Trump. I will be cutting out your EV credits for your stupid cars, and I'm going to sell my car to a liberal. They'll teach you not to fuck with Trump. I know if I sell these things, I'm going to be regretting it, but you got to take your profit.
I think the AI boom is very interesting. Of jobs being eliminated, and we're just not seeing that. We are seeing jobs evolve. So folks have to be ready to embrace new technology, to utilize technology to its fullest. One of the questions we're asking ourselves today is, what are employees going to do with this increased time and productivity? Are they going to actually use it to upskill themselves and focus on maybe more client-facing activities or more revenue-generating opportunities? Or are they going to take that time to spend time on Instagram and looking at recipes and other things? So it's a really interesting notion. We'll keep a pulse on it in the upcoming months, but I think people shouldn't be
$3.70
of losing their jobs, but they need to be open to evolving.
So when we look at the types of jobs, and you talk about evolving, tell me about 2025, the year of durability. What kind of jobs seem to be, the way to go type of thing?
I think anything that
YouTuber.
requires soft skills and that
All right.
customer service, sales.
Thank you very much.
Seeing the healthcare industry and what it's going to continue to do as the generations continue to age. So healthcare.
Thank you very much.
Obviously for the summer, leisure, and hospitality. And believe it
Out
or
of
not,
460.
I know it's in the beginning of June, but folks are already starting to talk about
Anybody take that one?
hiring for the end of the year and peak needs. So there's definitely lots of opportunities.
Richard.
Out there.
As you talk about seasonal hiring, we had a guest
$5
earlier from Aura Intelligence who said to me that from December 2024 to 2025, software engineering job postings grew consistently with a steep incline noted in April. That reflects a combination of some seasonal hiring cycles and some renewed business confidence. What would you say about those software engineers and other types of jobs like that?
I think it's definitely an opportunity and something they should be excited about.
We hit the 63 EMA, so what do? Anybody take that trade? A beach trade a day will keep the doctor away. The Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. A beach trade a day will keep the collectors away. Damn, Jim. You're on fire. Amazing grace. Can we get to the old bottom if we break the 63? Yes. If we break this resistance, maybe. This new support, 5998.53. But that was a nice little trade right there. Richard, I've got it back. Uh-oh. $5.70. Richard. So far, we've had the 63. I hope he didn't get scared from yesterday. I don't think he scares too easy. Oh yeah, Buy Me a Boat. I haven't heard that song in a long time. I think we're due for a good song right now. Jenny! Today she's dressed up as my little sister. The woman of 1,000 costumes. I love you, Jenny. I love you with all my heart. I tried to get a job at Schwab, and Carl wouldn't let me. Because Carl says his way is the best way. But I'll keep trying. Maybe one day I'll take you for a ride in my boat. I love you with all my heart. Jenny. Oh yeah.
I wish I had a rich uncle that could kick the bucket and I was sitting on a pile like Warren Buffett. I know everybody says money can't buy happiness.
Oh yeah.
But it can buy
Me a boat.
It can buy me a truck to pull. It can buy me a Yeti 110 ice down with some silver bullets. Yeah, and I know what they say, money can't buy everything. Well, maybe so, but it can buy me a boat. They call me redneck, white trash, and blue collar. But I could change all that if I had a couple $1 million. I keep hearing that money is the root of all evil, and you can't fit a camel through the eye of a needle. I'm sure that's probably true, but it still sounds pretty cool. 'Cause it could buy me a boat, it could buy me a truck to pull, it can buy me a Yeti 110 ice down with some silver bullets. Yeah, and I know what they say, money can't buy
Anything. So yeah. Buy me a boat. Boat, yeah, there on the river. Let's go fishing. Buy me a boat.
It could buy me a truck to pull it. It could buy me a Yeti 110 ice down with some silver bullets. Yeah, and I know what they say, money can't buy everything. Well, maybe so, but it could
Buy me a boat. Yeah.
they say money
Can't buy anything. So you can buy me a boat. Buy me a boat. Oh yeah. Okay, we're at resistance again. Thank you very much. Thank you very much. You know, I think it's about time that this thing does break out to the top of the orb. Now we did finally break above the 50 SMA bug. You see this hammer off the 63 right here? Jimmy should have took that trade. You know what I'm talking about? But I had to celebrate because I was going out and buying me a boat. No, I'm not in anything right now. Oh, you bought the hammer? Oh, shit. Randy. The hammer off the 63. Well, can I tell you something? I'm up over almost $1,300 now. Time to take a break. Go have some chicken soup. Livid's got the truck to pull it. So folks, this is what I want for Christmas. YouTubers. That's a damn good song, you know it? Okay, we're getting back at support again. The 60-20s are in my radar. If we bounce off the 63 again, I think we had maybe 3 candles above the 50, and they're really not that impressive. Or above the 9, above the 50, excuse me. So let's go over the watch list, shall we? Someone say yes. Jenny, I love you.
A lot of these offerings underway.
Are you married?
The high frothiness, it does.
I hope not. Because I've become very fond of you here lately. We're closing in on a double top on Tesla again. And the video came back and hit the 200 on the 1 minute. Right there. She knows I'm talking about her.
flag scenario where we did break the primary trend.
Microsoft.
Relative higher highs and higher lows, but we were not able to get back to those all-time highs. And actually, this
We did break the double top, you idiot.
The overall equity market broke. We have to be mindful that the street was actually very upset about the monetization of artificial intelligence and the lackluster, pickup of Copilot compared to what the street's expectations were. But we did see this bearish cross taking.
Extend that trend line out there.
Went below that
See?
200-day moving average.
You want to extend that on out.
Also, obviously saw that momentum to the downside.
This could be ready for a pullback.
As an area of,
I'm gonna look this up.
Get a little bit of a
This is on the
not only because of the broader market, but you did see some
daily.
buyers stepping in, started making some higher lows.
Let's see if him and I see eye to eye here.
The earnings that we saw back on April 30th, where we saw around a 6%, 7% spike to the upside, and it's been in a very strong bull trend ever since. Started seeing that bull cross 12 the 20 period moving average above the 200-day moving average. Once again, seeing some follow through, making some all-time highs here. Getting a little bit thin when it comes to the volume. You did see a bearish divergence in the RSI that has now been broken, but something to be mindful of. And the MACD is actually in a bearish formation with the 12 EMA below the 26 EMA. So cautiously optimistic here, a little bit stretched if you're kind of looking
cautiously optimistic.
Leverage that 20-day moving
I'm
average,
not.
First area of support.
I'll tell you if I am in a
here,
second.
if that does break that 200-day moving average as your next area of support. So a really good chart when it comes to the recovery, but it was kind of the first one to lead us out, and it was the first one to kind of show some signs of weakness before the broader equity market dipped back in around.
We're going to take the body and run it to.
All right, Apple, Tesla, Microsoft, Jenny Horn, Kevin Green, a great look at
Jenny
fundamentals,
Horny.
upcoming news, technicals. Thank you both very much. Coming up after the break, our market meetup panel is studying the action that we're seeing. We'll have a great conversation next.
What's up, Carl Nation? It's your number one.
We can go to 480.
Wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention.
So you've seen how he didn't extend this trend line out. Okay? So this can go to 480. Now, you want to go ahead and put a price line all the way across here. I think I'm a better chartist than he is. Oh, that's a little bit too high. $467.70. So we broke out of the double top. Now he said we didn't break the all-time high. I think he's full of shit. Because we did. Now, you got an inverse head and shoulders right here of a two-headed snake. So we're going to take the trend line right there to there. And that's your second resistance. And then you want to take this trend line and run it from there to there. And that'll be your support. See, you got this trend line, that, and see how we couldn't break that for 2 weeks. Then we finally broke it. So this thing pulls back to the 9. We might be a little bit overextended, but this thing, it's already had earnings. So earnings ain't going to have to take some news. And it just laid off people, I think. Was it 6,000 employees? Let's get back to my SPX here. Okay. So this is how I see it, Mr. Green. You want to set your alert at the bottom of the gap, right off this wick for today, and see if we can catch that bounce and scalp it. So you got a gap. So you got the top of the gap with that wick. That's going to be your support. 469.78. Set an alert. Do it and do it now. Mercy. Mercy. May I help you?
Hello?
Yeah, is this Mercy?
Good morning. My name is Sabrina. The new Trump administration has changed the Medicare policies for your state of Missouri. We have to check the benefits available for you. I believe you already have Medicare Part A and B, correct?
Can you tell me what Mercy stands for? MERCY.
Well, I was asking if you have both Part A and B of Medicare.
I'm asking if you know how to spell mercy, because that's what your call ringer says.
Let us talk about this some other time, thanks.
Yeah, because I know you're a bitch.
Welcome to Verizon Wireless. Your call cannot be completed as dialed. Please check the number and dial again. Announcement 4. Welcome to Verizon Wireless. Your call cannot be completed as dialed. Please check the number and dial again. Announcement 4.
Now that tells you right there. Message history, look up. Where's the blocker at? It doesn't matter, they'll get another one here in a second. If that was a guy, I would have said the same thing. So ladies, don't get too upset. I didn't mean it like because you're a woman. We got to get you to extend your charts to the right. I'm a good singer. Randy? Is that what you said? He is a good singer? You got stuck in Spy? Shit. We're at the VWAP. We're at the VWAP. Oh God, you did not. You bought 600 calls? That don't sound like you. Oh. God. I said, you bought 600 calls? You must be rich. Okay, we could be... We're holding the VWAP, so resistance to break will be this here top. About 600 calls, Jimmy. I'll buy you a boat. And it's got to hold. These are the options. It needs to hold VWAP. It's a little bit too high. We just broke support. 599.31 has to hold. 599.30. Or we're going to double bottom down here at 598.91. And it's not the good, it's right now 10 o'clock, 11 o'clock Eastern. Hello, I'm Mercy. Trump is holding back from calling out China over Russia war aid. Bloomberg ain't nothing but a liberal piece of trash. We're at on the 5 minutes /ES is squeezing. We bounced off the 63. So we're squeezing on /ES right now. What? Hey, does anybody know anything about Discord? We got somebody that's been blocked. Randy, you held it, didn't you? Held the VWAP. How do you override the bot? I'll make you a moderator. Magnificent, you know how to fix that? Michelle's been blocked for an hour. She was a bad girl. Michelle has been blocked for an hour because she tried to post two bitches. Whoever put that in there really sucks. It should be, well, the moderators should be the only ones that ban people, not the stupid. Almost gets to get rid of that thing. Dino app. Just get rid of the bot. How do I find it? Don't seem to really need it in here. Richard, we might have a one-on-one here. Figure out how to get rid of it. We can kick people out on our own. Where do I go? Edit servant profile. Security actions. Security actions. 2-hour temporary stop members from joining the server. No, temporary stop the direct message from being members. No, that ain't it. Well, I like to know where the bot is. Well, that'll teach that girl. Server boost, Nitro, billing settings, data and privacy, content and social. Yeah, I don't got time to mess with this right now. Did you get out, Randy? Where are the bots on Discord? We're back to the VWAP. I think that I'm going to go have lunch. No, the market is consolidating over yesterday's drama. Now we've got the right shoulder here. So we've hit the right shoulder twice. If we keep a higher low, we could break out. We've already hit the right shoulder twice. Actually, maybe 3 times. So if we keep the higher low and it starts to go up, we could double top and break out. That or we come back down and do a double bottom and see if it wants to hold support. But if we keep a higher low, from instead of not touch this line, because we've already hit it twice here, maybe 3 times. The right shoulder from right here. Get your left shoulder, right shoulder, and the wick hit the right shoulder here. So now we got a head and shoulders, so I wouldn't jump in it right now until it broke that. and then you just got to type. It's tight. It's hard to say. I'm going to wait because I'm going to go eat. I wouldn't mind getting rid of that dino, whatever it is. That bot. Foghorn. My private messenger. She's not in the chat now. Tesla new highs. Yeah, I think we're just consolidating.
For the big three stocks, 3 charts, and 3 trades. Ben Watson will take us through the charts.
I'll be right back.
Through the trades. It's Joe Teagay, portfolio manager.
I'm not rushing nothing today.
Joe, well, it's good to see both of you all. Joe, I want to start out with you. I want to get your big picture take on the market action we're seeing today. It seems like it's risk on. We've reclaimed the 6,000 level on the S&P 500. What's your view?
Yeah, it's absolutely risk on. What we've seen so far this year, though, especially the past.
Not during the call again.
Everything is great one day, and then over the weekend, like we're gonna have something happens, and it seems
always
terrible.
clean. May I help you?
So far
Hello?
this year, it's
Yeah,
always bad.
what's up?
It seems it's never as good as.
May I help you?
Good morning. My name is Mary. The new Trump administration has changed the Medicare policies for your state of Missouri. To proceed with checking your available benefits, I need to confirm you have both Medicare Part A and B, right?
Mary? You sound like the lady that was in here just a little bit ago, and her name was a different name.
Well, I was asking if you have both Part A and B of Medicare.
No, I don't, baby.
Sorry, but you do not seem to qualify for the plans that we have.
Well, that's
Have
bull.
a great day.
That's a bunch of crap.
Not the strongest performer within the Mag 7, so what's your view on this?
Yeah, so people are concerned that this large language model, people are going to go to these chatbots rather than Googling. That is true to some extent, but Google is ahead in so many other fronts in this AI race. One really exciting thing for Google is Waymo, their automated car service, which I can't wait to see what that's going to look like in 5 years. It's going to be super exciting. But yes, they are challenged on the search area, but they are working at that, and they have some really amazing AI features that have recently come out. In Gemini, I think they're going to be able to find a way to replace some of that lost revenue for sure with their Gemini, maybe subscription-based model to be into these AI services. So yes,
oh, Michelle.
There are some headwinds from Google. They also have the regulatory headwinds, of course, too. But
Please block her again.
This race to get this software out there to benefit off of this AI, to utilize these tools, harness these tools. Of course, we
don't talk about my bot like that, Michelle.
all of their software that
Just posting links too fast. Michelle, you're posting links too fast. You've been a bad girl today. Your husband needs to cool you off a little bit. Needs to take you out to dinner. Crows at the 200. Which one? Oh, God. Randy, aren't you glad I told you to wait? Shit, the SPXs are at 1040. So the 6,000, let's go to the 6010s. Ladies and gentlemen, the 6010s. Make sure give it a good one. 330. Woo! That's how you do it. To 4.70. Now this thing can go higher, so I bought 3, sold 2, and got 1 left. Great job, Richard. We got to break the 9. 490. We break the 9, we go into the 21, 59.98, and definitely scale all out. If not now, $5. That was a nice setup there. Right hand side of the computer screen. Oh. App setting, appearance, visibility, voice, chat, notifications, streaming mode. Dino. Oh. Dino? Is this what you're talking about, this Dino app? We'll do it after hours. Kick the dyno. Are you sure you want to kick dyno from the server? Should I kick it? It's kicked. Oh, I kicked it. Well, how do you get it back? We kicked it. Well, I've kicked it. How do you get it back? Okay. Yeah, because I kicked it out. Damn it. And what the hell have I done? Are you guys just joking or what? I have no clue. Randy screw up? Uh-oh. Are you in calls or what? You didn't sell them? Uh-oh. Well, we got snake breakout pullback. Let's see if we hold the 200 right here. If not, we'll double bottom off the orb. You'll still have a higher low, but I'd rather it bounce right here. Kick the Dino bot. Okay. Wants to access your Discord account. Should I authorize it or just leave it alone for now? Comes to computers, you want me to not touch nothing. I don't even know if this is my server. It's really not my Discord. I'm just here. We got to break the 21, Randy. 59.93.82. You got to break the 21. I don't know if I know my Discord password. Let's break it. No, you're on the SPY. Oh yeah, the 200 was resistance on the SPY. How are we the opposite? Professor's inputs. I don't blame him in a way. I'm not in the trade right now. I bought the dip and got out. Well, we're getting ready to hit resistance here, Randy. Are you? I need to get all my passwords right again. I can buy me a new book and start fresh. I think I'm getting familiar with it. We'll see. Right now it's just kind of sitting here. It says it's ready, but we got to break the 200. About where'd you get in at, do you know? Back at VWAP. Hmm. Oh, he's back on. Good. We missed you this morning, punk.
Yeah, I hated that it happened because freaking that knife that happened at the freaking 10-20 candle.
Yeah.
I freaking had that bitch nailed.
Today?
Yes.
Very good. I called out the reversals also.
I saw that it was the same spot that it knifed to at 11:15.
Oh, this morning, you mean?
Yeah. It was the same exact spot that it knifed to at 11:15 yesterday, and it was also like a PM resistance from 5 to 5:30 yesterday morning. Like I'd already had that line marked out, and it busted below the 63. I just waited for it.
Yep.
I don't think my contracts went down one bit when I bought them.
I traded 2 puts today and 2 calls. And the puts, if I'd have held them, that would have been a 300%er.
Yeah, I wish I would have got any calls from the start. I wanted to.
I got in at 330, and then I sold them at 460 and $5, and then it dipped all the way down to $1,000. I went, shit.
Yeah.
I've been
6,024.50 was the top of one of my resistance zones, and it bounced at 6,025, so I was off by 50 cents.
Yes, yeah.
But I got my ass busted yesterday, and I was mad about it, so I recharted everything, and I found all these potential knife spots.
I figured
Yesterday got me good.
I know you well enough, and I figured that out. I tried to message you, but I couldn't message you anymore.
Yeah, I had to delete Discord because none of my notifications were working, like when people were tagging me in posts.
Yeah.
I wasn't getting notified.
I accidentally kicked out the Dino bot today.
Dino's gone?
Yeah.
No.
We'll see.
He was a smart ass.
Yeah.
Always telling me to quit spamming.
We'll see how it goes. If we see somebody getting out of line, we'll just warn them once or twice, and then 3 times you're out of here.
Like, I've been in here a couple of months. I ain't seen but maybe 1 or 2 comments that towed the line.
Yep. I'm usually a 3 guy. I mean, 3 times. That's it. That's what I did to Bobby. I said, man, I can't take this shit no more.
Yeah, but you can't have racial or homophobic comments in Discord or you'll get reported.
Yeah, so we'll be cool about that. No nudities, Michelle. No nudes.
Alright, this is a rejection zone, so let me swap this out.
That goes for you too, Angel. No nudes. Don't be posting no nudes in here. Oh, you're pushing it.
I'm pushing one right now. What do you think about that? Oh, not enough, huh? Alright.
1, 2, 3.
60, into the 63.
On the 2 minute and the 1 minute.
Yeah, I'm on the 5 minute on the S. It's bounced off the 63 1, 2, 3 times already today.
Yeah. And usually 3 is too many.
Oh, man.
No, I thought you... Actually, I thought you left the server because you got mad. That's what popped in my mind.
I did get mad, but freaking also couldn't get any notifications and people were tagging me all day long. It just pissed me off, and plus some of my other channels or some of my other servers that I'm in were messed up too, so I just said hell with it, deleted the whole thing.
Yeah.
I have a real tendency to fool with stuff until I break it, and then I can't figure out how to reverse what I just broke.
Yeah, that's what I did with Dino.
But no, that one yesterday really, that pissed me off, dude.
It probably pissed you off more when we bounced back up.
No, it's not that it knifed, it's why it knifed. Like, I was so fucking mad that one tweet freaking did that to the market. Like, I'm just so tired of trading the market and having my technicals right and having my levels right, and then one of these idiot hashtags tweets and it freaking blows the whole freaking position up.
Yeah, I kind of explained...
It makes no sense.
I kind of explained to the algorithms. I kind of explained to the room that said we'll probably bounce back because it's just a tweet. But I was nervous. I mean, I got down to 15 cents and I said, shit.
I didn't lose but $150, so it wasn't the loss that pissed me off. It was why.
Yeah, I know.
It happened in the first place.
Yep.
Like, at some point, you can be perfect on all your levels and perfect on all your technicals, and it does not effing matter in this market. Nothing makes sense.
Not right now, though, because it's all news ridden. Technical fundamental traders, I have probably some of the biggest issues with. Technical traders, I get along with real well.
Apple's at a pretty good support right now. It's on the 5-minute. It's sitting on the bottom of the orb and the 63, which are stacked on top of each other. That's a lot of support.
I'm gonna go in there and cook my soup up, and I'll be right back. I'll leave this TV on, and there's Mr. Hickey.
NVIDIA might run. It just cleared the 63 on the 5. It doesn't have any resistance levels above it, and Amazon wants to run. It's trying to clear the 63 on the 5 with no levels above it.
I swung Tesla yesterday.
Yeah, how did you do on that?
I made $1 on it.
I was gonna say.
Contract.
I told you yesterday when you were worried about the fact that it actually may pump now that he's going back to run it, because that's what everybody was waiting on. Was him to quit playing around in government and go back to running the company.
Yep. But then him and Trump got into it, so that's what brought it down so hard.
Yeah, but I think the people that have all the money in the company, like, they were waiting on him to come back.
Oh yeah.
They're not really worried about a Twitter spat like retail investors are. They're freaking bigwigs. They got big money in there. They need Elon to freaking go in there and do something.
Yep.
Tesla did get it downgraded today, though. Goldman Sachs downgraded it to 285.
A little bit too early. We should have waited until the RoboCop came out. The Robo thing.
If you look at the Thinkorswim live news on Tesla,
Yeah.
they've been freaking crushing Tesla all morning. Don't buy Tesla stock. Tesla stock has room to fall. Goldman Sachs lowered price target.
Idiots.
Showing signs of weakness. Yeah. I mean, they're putting every negative news article they can in Thinkorswim.
Elon Musk has wrecked Tesla's brand with potential buyers and the government. Never bet against Elon Musk, says Jim Brewer. I agree. I got a little pissed off at him yesterday. I think he went too far, but he could have done a little bit. And when he brought up the Epstein deal, that just went a little bit too far. You don't attack the family. Randy, did you get out and reset yourself? Randy.
I have a gnat flying around me that is about to get messed up.
Well, we haven't broke the VWAP yet, so we're still bearish. Sure you didn't buy 600 contracts? I'm kind of relaxing right now because I'm getting ready to go have lunch. I don't want to get stuck in a trade and have to deal with it until I eat. I had church notified me, said one of our friends had passed away. You got to break 599.15 right as is, Randy. Or the 200. That's a little bit lower. SMA on the 1 minute. And we're squeezing on the 5 minute on /ES.
Mm-hmm. Yeah, we are.
Then we're at the orb on the 1 minute. Bottom orb.
Yeah, you're also at a resistance zone on the. I mean, I know you can't see my chart, but you're in a resistance zone right now.
Yep. So my X resistance on the SPX is 6,071. $71 or 74, 71. I like 71 better. We'll make it 68. 6,068. I'll be right back. I'll get this done.
Number, because to be honest, 70% of GDP is the consumer. So we do need to kind of keep an eye on that sentiment, even though I know it's a volatile data and it's switches every couple of weeks, but it's just something to be aware of because at some point, soft data leads into that hard data.
Okay, Joe, stay right there on the GDP topic because I want to touch on something that happened in yesterday's economic data, and it was briefly touched on, but I think it's pretty significant. And here's why: we got international trade in goods and services, basically the trade deficit, right? And a month ago, it was a record high of 140 billion. It plunged to 61 billion. Remember, imports, which is what made last month go up, takes away from GDP. This plummet down to negative 61 billion should add to GDP. Should that alleviate some of our concerns about this negative print in GDP? Because Atlanta Fed, their numbers jumped right back up to over 4.5 in terms of GDP. Does that does that decrease some of those concerns? Show your thoughts.
Sure, it does, but I mean that's something that we talked about when that number first came out, right? Was that difference in the trade imbalance in terms of, because remember, GDP is exports minus imports, and if imports are higher, that's a negative number, which it traditionally is, right? And a lot of that increase in that import spending was kind of that front loading.
There we go, baby.
In advance of the tariffs that were going to be enacted, and then eventually got pushed back. So we did see that, and yes, Kevin, you're right. That number will kind of make its way back into.
There we go, baby Randy. Do what's smart if you're even. Or above it. Trim, do something.
Time to be careful.
Damn, coming, didn't do it.
It's that time of day, guys, between 11 and 12 CST where you got to be careful on your lawns. Weezer talking golfing camel on the pine, so not great.
Jimmy's having lunch. Mmm. Jimmy's watching close while he's eating his chicken soup.
Yeah.
So it's not something that
I've got a
screams.
new thing that I'm doing too. I got me another monitor and I put 6 of the Mag 7 on there so I can see what NVIDIA, Tesla, Amazon, Apple, Google, and Meta are doing at one time. Apple just lost the orb, so I think it's the reason we're seeing this heaviness right now. Everything else is holding the support except for Nvidia's coming down. Apple seems to be the one that's losing right now. Meta's struggling. We could see it drop. Shit, Nvidia and Tesla are both dropping now.
Yep. It's that time of day. Well, get close.
I called it out a while ago. Told everybody that was in their longs to watch out between that 11 and 12 o'clock Central Time.
Mm-hmm.
I do not like that time for longs. More days than not, you'll see a midday flush.
Dump part 2. And the SPY just couldn't get above VWAP.
Nvidia's dumping pretty good. Apple's dumping, but not like Nvidia. Google just lost the cloud. It's something too. I think Meta and Amazon are the only two holding anything up. What in the world is going on with Broadcom? All of tech is freaking out today. Broadcom's down 4%.
Oh, they were.
They just had a price target raise by Morgan Stanley.
It was earnings after hours last night.
Oh, was it?
Yep. This will be good for here in a couple of days. They want it back up 270. They raised price target to 270. So this is a dip buy, I think, is what they're trying to tell you.
That's what I was just doing. That's what I was just thinking too. I might get a 30 DT on it.
30 days out.
Yeah. Start it first.
What do I think on the SPY? Is that what you asked? What do you think on the SPY? It seems stuck. Yes. I got a pivot point right around 598.91, and we're below the VWAP. And my next support is all the way down to 597.60. It's definitely bearish as long as we're under the VWAP. And we got a double bottom here. So if we have like one big red candle, 598.33's got to hold. That's like your last final support. Unless we go on down farther. 598.34. And we got to break the VWAP. So we're at the pivot point right now at 598.91. If we can break that, I think we can get back to the VWAP and try to break. Then you got the 200. That's your last resistance to break on the 1 minute. And we're just at the wrong time of the day. Volume's real slow.
I'll go ahead and post this. See if you agree with that support line I just posted. See if you get something different.
On AVGO, 547.
See how me and you line up.
Okay. I don't want to use that chart. Come on now. Right now you're on the 9 on the daily. That's what we bounce back to. So long as we stay above the 9, look at the daily.
Okay.
So you're still bullish as long as you stay above the 9. God darn, man. Always clean. May I help you? I'm in the middle of the class. This better be good. I'm at work.
Good morning. My name is Sabrina. The new Trump administration has changed the...
Sabrina.
I mean, that 9 lines up almost perfect with that freaking 248.37. Well, no, it's a little bit above it. 248.72.
Yeah. I'm going to clean this up.
I've got an alert set for 248.50. As long as it holds that 247.50, I'm going to be in.
Well, you're right at support on the previous high that we had down the road back in 12th month, 20th last year.
Yeah.
So that's a good pullback. And that resistance is right at 250.25. And then your next support, which I think would be solid, would be right around 246.65. And then you got the 9, which we got it, and that moves around a little bit. So as of now, 248.74. Then we'll go to the 1 hour. Yeah, you're looking good here. 248.74 is solid. Between that and 246.65, because you got the 200 EMA and SMA right there on the 1 hour time frame.
Mm-hmm.
So
look at the contracts now.
I'll put these in here. So if it holds the 248.74, you're great. And right now the 250.25 is support. In my opinion. We pulled back to a pretty good spot.
There's a lot of volume and open interest on the 280s for the 3rd of July.
And I just did that on the daily. And I just kind of look at it now on the hour, and you can see where we tried to break out last night, and we couldn't do it, that 250.25. So if that holds after hours on the 1 hour, and I'd probably set my alert just under that big fat candle right there. And that number is 249.37.
All right, we're back to the CP grid on the SDX. I mean on the ES.
Where's that?
Wait and see if we bust through it. We're there right now.
Do you think we were bad mouthing you this morning, Funk?
Nah. I was pretty sure if I was asking where the hell I was.
Yeah. I kind of did. I said, I hope he didn't get scared.
I didn't get scared. I frustrated that freaking tweet.
Well,
Notification, so it just piled on each other.
I just knew you were frustrated. I just because I think I kind of know you now.
Yeah, it ain't hard to tell when my voice changes.
Mm-hmm. The 260 strike for the 20th on AVGO are now at 360. They got 4,700 contracts on them. So I'm going to watch them at 255. I'll watch that one, see if we can get back to 330. If we hit this 249.37, I might just go ahead and grab some. 349.37.
Is that tweezer bottom? That is a tweezer bottom on the 63 on the top.
Bitch. Always clean this gym.
Hello?
Yeah, what's going on, baby?
Good morning. My name is Sabrina. The new Trump administration has changed the Medicare.
All right. What are you going to do?
I don't know. I'm going to get on Medicaid. I'm going to get on Medicare.
I'm looking at ES. ES is really interesting to me right now because it has a tweezer bottom 5-minute on the 63. But it looks like it has enough pressure to freaking double bottom. Nvidia and Amazon are pulling it down. why I didn't jump in calls on that 63. It looked like too much selling pressure.
Mm-hmm.
Nvidia and Amazon both had the 63 coming up, which also lines up with the double bottom on the S. So I love that setup. Looking at the 60 tens, I'm sure you're looking at something a little bit more expensive. The Nvidia will hit the bottom of the 4 at the same time that we'll double bottom on the S.
We're about to touch my little support here. They're at 3.
Dude, I love these 6 freaking Mag 7s that I can see. Like Google's about to hit the top of the board, Nvidia's about to hit the bottom of the board. Amazon's on the 63. Now we're getting close. Maybe there's a little bit of that though. Based off these 2 cores.
Man, I was just within a few pennies of hitting that thing right now.
Yeah.
37 on AVGO. Oh, I put NVIDIA up there. That's supposed to be AVGO. What the hell did you tell me to look at? Yeah.
VGA? Yeah, Broadcom.
Okay, Randy, we're at support on the SPX here. I mean the SPY. I wasn't paying attention, but we hit it. 597.60. Uh-oh. Sorry about that. Remember, everybody try to be on your best behavior so we won't get screwed up and be kicking out the dyno. Lesson learned then.
Broadcom just got another upgrade. Bank of America raised the price target at 300.
Oh shit.
Mm-hmm. Yeah, I'm gonna get in some calls on it.
You're on the ball.
After yesterday, I freaking reset myself and redid all my charts, redid all my screens, and locked in.
Kids today call it dialed in.
Dialed in, whatever you want to call it. That's what I am today. Here we go.
I just triggered, my alert just got triggered.
Yep.
So we broke down below the orb on 1 minute on SPX.
There we go. All right.
Ooh, nice.
Through that. Yeah, broke through there. I'm gonna wait just a second and see if it's trying to push to the 60. I mean, to the 200 on the top.
Yep.
I think it's strong enough to. I'm watching Nvidia and Amazon break down. Meta's breaking down.
Oh man, these things are cheap.
This might be our midday flush we're looking for.
Yep, 120.
Yep. If it touches the ES 200 on the 5, I'm gonna buy. Because that's right above a support zone anyway.
We're at the 200 right now on the 5 minute. And we got one more.
I'm sorry.
Yeah, we got the EMA right below it. 59.76.15. So these are 120. The 60. Oh, damn it. I got the 60 10s. Oh, well. $160, baby. Take some money off the table. $160. That's the way to do it. Oh, what'd I say? Shit. I wouldn't shit you. You're my favorite turd, Magnificent. Oh, God. Oh, I didn't even see. I just... Hello? Richard, get... We're going to have one of the nicest rooms in the world after kicking that out. Ain't that a bunch of shit, Richard?
Yeah, yeah.
They're at 3:30 now. Oh, that's AVGO.
Everyone's 70.
Yeah. Oh man, I just love how that bounces off the 200 like that.
What was that? The 200?
SMA on the 1 minute. On the 5 minute, 5 minute, 5 minute, 5 minute, 5 minute, 5 minute. Excuse me. What a dummy. I thought I was looking at the 1 minute. See, I'm not used to trading it off the 5 minute. You know what I mean?
Yep. Came off the 200 on the 2 minute cleaner.
Yeah. The wicks what hit that.
The body's closed on the 2.
So I got to change out of work. Much cleaner off the 2-minute. Much cleaner with a tweezer bottom.
Mm-hmm.
It's now 12:06. I'm gonna go get me drink this water and put this back in the kitchen and get my. Be right back. Oh. See if we retest the 2-minute here with a higher low.
Okay, this is getting ridiculous. Mizuho just put a outperform on Broadcom and raised the target at 310.
No good.
And it's still dumping.
It's all right. Give it the 3-day rule. It'll bounce.
I got my alert set. If it hits this freaking 248.50, I'm gonna ride it.
Serious.
Yeah, we dumping again.
I'm gonna send this to Milky.
Oh, milky filky.
Yep.
That'll let me go in there. Some better than half this stuff got in there.
Yeah, I'd say so. Zach gave me a $3,600 watch. Told me more or less paid me to get into the room.
I don't know why they had, like, I don't say anything bad, but yeah, they had running SPX calls isn't. Nah, it's not even close.
Mm-mm.
This whole spiel is based off of damn game exposure.
Okay, we're at $1. I'm going to raise these up. I'm going to get out of these 10s. Move it up to 6,000. And clean this up. Well, I want to keep that line. Let's just clear that out. What the hell happened? Oh. That's funny, Jim. I missed it. I got typing and stuff. I could have got 270 at least. Well, that was a bummer. $3. It's dead. Let's break the bottom orb. We got to break the 21 here. Get rid of that. Let's say break the orb. Break the 21 EMA, you beast. Shoot, I could have had 270. You liked it, okay. Back to 310. Well, that didn't look too good. Should have sold them at 350 after the third soldier. So we broke out of the flag. Let me see where this line takes me here. We're just barely at the flag right now. We're at a 1, 2, 3 bits. Right off the orb. So if we break this resistance, we'll have a nice little pop here. We're at 360 right now. PLTR. We're at 330. We were at 360 on the SPX. I want to break out. PLTR broke resistance. 125.41 that I had. There we go. All right, 390. $4. I love catching squeezes. If you're in this trade at 3, take profit. Take some off the table. $4.50. $4.90, baby. Yeah. Old MacDonald had a farm. 578, 568. 3 white soldiers. I'm taking some off the table. This is too good to be true.
Here's the orb on the ES, so yeah, good idea.
Oh, yeah. Take a deep breath. The 610s went to $2. 2 something. God. Richard. Richard was nice enough to send me a little bit of money for my vacation coming up. If anybody else would like to, please contact me privately.
When did the jobs numbers come out?
This morning.
Oh, did they?
Better than expected.
Of course I missed it.
They've missed 3 months in a row now. Street.
Yeah, but are they lying on the job report? Did they massage the numbers again?
I don't know if they massaged them or if Wall Street just has a grudge. Because usually they overcasted them during the Biden regime. Now they're undercasting them during Trump.
Well, they over-reported them during the Biden regime.
Exactly. That's what I'm saying. But now they're under-reporting them and they're coming out wrong. Is what I'm trying to say. I guess.
Yeah, after the election, they came out. Oh yeah, we got the numbers wrong.
Yeah, only by 1 million last year. Well, what about the other years? Anybody take that trade on the SPX?
I didn't, and I hate myself for not doing it. I learned a very valuable lesson just now.
Yep. Well, your mind played.
I did not know the moving averages were that far off between the SPX and the ES. And you
Yeah.
know how I've just been watching the ES?
Yep.
Yeah, I just scrapped that idea. Now I have a string with the ES and SPX because now I can plainly see the damn 200 pounds that I missed because I was staring at ES.
Yeah. I was going at a different area, but
So from now on, my strings will look exactly like this. I will have one string with ES and one string with SPX. They'll both be set to the 5 minute, and I will take freaking knives based off where I feel it's going.
well, God. Well, I think that Funky is a learner where you catch yourself needing to adjust, and that's what all traders need to learn is how to adjust. You got to adjust. You can't just keep being the same old. You got to keep adjusting and adjusting and adjusting, or you get caught in a web.
Yeah, I would have taken that with you in a heartbeat if I'd freaking had this set up on my screen.
Well, you taught me about the orb. I mean, I traded that, but I never called it the orb. Now you see how much accurate that it brings it. It brings it. I really got picked this up off Zach, I think, last year or before. I have before, but I mean, it really kind of alerts you to the first half hour of the day how important them support and resistance levels are.
I got it from Milky.
Yeah. And I think I picked, not the orb, but I picked up, I should be looking more at the pre-market.
Yeah, the orb and the pre-market high and pre-market low are three things that I never fail to mark.
Yeah. Milky's getting back in shape, but she's starting to look good.
Did they ever come back from Mexico? Wasn't they there for like 6 months?
Yeah, he lives in Mexico. He got a condo down there. Richard, what's this? Richard's kicked out. I got a message for her. Oh, Richard was too slow. Make sure you take that vitamin D. You better be on the best behavior. You get 3 strikes.
And that is a clean trend line.
Michelle, you're not setting a good example.
Look at your SPX 5 minute and look at your last 3 5-minute highs. That is a clean trend line.
Yep. Richard, don't pay no attention mind to her.
breaking the trend line now.
Richard, you're not learning right. 450 to 530 right there. That little bitty candle. Crickets. Make sure you're drinking enough water. Okay. Schwab.
As far as the market is concerned, as I mentioned,
Where's Caroline?
it was a beat on revenue. I think the comparable sales was really interesting because I was talking about this moving into this earnings report, that it was going to be fascinating to look at the breakdown of the regional markets as well. International holding up 6%, continued bright spot over in China, as we say, but America's down 2%, and so the American component really suggests that they are struggling in the US more than globally, and I think also that was something that caught the street's attention too. We have seen a number of cuts to price targets citing some of these concerns, but it's not all been that bad. I did see actually Bernstein Society General Group analysts emphasizing their confidence certainly in this company, still the price target maintaining that at 350, and talking about how China is providing a margin tailwind to sort of balance some of those pressures. I was talking about US domestically and also with some of the tariff exposure as well, guys.
And amazing that we're seeing this move to the downside after saying that they actually grew their U.S. market share, which I thought was the huge concern for this company. So yeah, there's still some things to like, but you never know by a brutal move to the downside today. So appreciate it, Sam, badass contributor here on the network. And before we go here, Alex, just to look at an example trade in Lululemon, a difficult day to trade, obviously. But
Okay, I'll be right back.
Of this magnitude. magnitude, which has felt very unlike Lululemon.
Wanna go
on the
make me a
back
hot
end.
chocolate?
Although now I feel like this has been, we've seen this for 2 straight quarters where we sold off pretty hard. But nonetheless, always opportunities here when you see names that break down like this.
So a couple things, and I preface this with Lulu has been down all day long and it has not rallied. So that is notable, right? A lot of times when things are over
3-day rules.
you'll see kind of these big flush outs and then the stock will start recovering. That has not happened in Lulu. But say you do see opportunity despite the commentary, you just look at this and say a 20% haircut wasn't warranted and you want to establish a longer, more bullish position here. Over the next few weeks, you could do something like a call debit spread. Now, a couple things to note, Lululemon does not have that much strike availability. So it has $10 wide strikes in many of the expirations. And so what I looked at here was a $10 wide call vertical in Lulu for the June monthly expiration. It's a 260, 270, and you have to, in this case, spend around half the width of the strikes. So say you do spend exactly half the width of the strikes, that's $5. This is a little bit bigger trade. You're risking 500 with a chance to make 500 with a break even basically where we're at. So it's a risk-defined way to kind of buy the dip in Lulu, needing a rally of $6 over the next few weeks before a sell-off of $4 or $5, at least in terms of where it ends up. Of course, this is the bullish look at this. Maybe a put vertical and similar strikes could make sense if you wanted to, kind of sell into weakness. But a stock that just lost 20% of its value after already struggling, perhaps some people are looking to step in here and add some exposure on the bullish side.
Yeah, and I mean, hopefully we can see things turn around because today's move to the downside with a massive gap lower is even rewriting this downtrend even more further to the downside. So it has been brutal for Lululemon shares, but we'll leave it there for FOMO. Now coming up next, completely shifting gears here, but we are talking Taylor Swift's playbook and what really some like-minded business leaders can learn from what has been called now strategic genius. So we'll be joined by Kevin Evers coming up next.
Nifty is at 320, AVGO at 325. Still holding up there. The 260. The SPX bounced up pretty good there. Back to 550.
Investor or just getting started, Charles Schwab offers a webcast.
It was at 430 a little bit ago.
Are you a long-term investor? Our
570.
breaks down different investing styles, including growth, value.
I'm getting to where I'm leaving one on the table, and I think it's been a big help.
Chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coach.
We're coming up to resistance levels. I got my resistance channel on SPX is 5,998.53 to 6,068. Got a $2 spread.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free.
I love
Schwab
you,
Network.
Nicole. You're a real woman.
Welcome back to Next Gen Investing. It's now time to discuss a retailer that has been a recent really strong performer, which is Urban Outfitters, with an upgrade today. Joining us now is Diane King Hall, the host of Morning Movers.
Urban Outfitters
Diane,
upgraded?
walk us through this upgrade today. Urban Outfitters has been definitely one of the most interesting to watch, and especially because we've seen
I like how Schwab does their stuff.
losers, and in retail, it's that way every quarter, yes, but they had a stellar reaction to their earnings.
They did. I mean,
It has 2 upgrades for Friday.
Has been an outperformer. Today you have one bear who we'll call it coming out of hibernation when it comes to Urban Outfitters, but we'll call it, cautious optimism. This is Jefferies. They're moving their rating to a hold from underperform. They see a more balanced risk-reward outlook. Their new price target is $70.
Well, $70. We're there already, you chicks.
Are under pressure today, off about 1%. But again, year to date,
God.
that banner performance.
That ain't much of an upgrade.
1% year to date for Urban Outfitter. And Jenny, you and I have talked about this company before and some of the strong performance they've had, not just in brands that we're familiar with under the umbrella like Anthropologie and Free People, but even its namesake brand did better in their most recent quarter. What Jeffrey sees is just improving financials overall. They pointed to their first quarter, which you and I talked about, and just optimism, heading into their investor event that's coming up. The segment performance they like overall, the strength in the brands like Anthropologie, Free People, and Nuuly. They see that continuing to drive top line growth here. But again, you can't ignore the progress that we've seen with regard to the namesake brand. They highlighted the debt-free balance sheet that Urban Outfitters has. Any investor tends to like that, obviously. And then the inventory levels, they are looking at those.
Look at this.
That they are up 15% year over year and slightly ahead of sales growth. They're monitoring it, but they're not seeing it as problematic.
Impeachment, deportation, crazy. 6 takeaways from the wild
This analyst is
feud.
about the possibility of growth slowing when you think.
Impeachment, deportation, crazy. 6 takeaways. Did I say you could change? From the wild feud between Trump and Elon Musk. Front headlines on AOL.
Quarter for these apparel retailers, so still remaining to crush it across all 3 of their brands. We will leave it there. Appreciate that intel, Diane King Hall, host of Morning Movers. Now time to discuss Taylor Swift, which I know you've all been waiting for, but joining us now to give us more insight on the latest and what really these various business leaders can learn from her genius is Kevin Evers.
Genius? Oh, shit.
Business Review. So Kevin, first and foremost, thank you so much for joining us once again. And
I don't want to hear that. You stupid broad.
She's made just over the last several years.
Well, the whole saga about her masters is one of the boldest moves that we've seen in recent music history. Her masters were sold. She had no control over who those masters were sold to. So she found a legal loophole and decided to re-record all of her old music. That's a bold move, but it's a pretty crazy move too if you think about it. She was essentially
She didn't find it.
Don't listen to the old music. Don't listen to the music that you've listened to your entire lives, the music that's so intertwined with your own emotions and your own experiences. And she told them, and her fans followed suit. Those re-recordings have outpaced the original recordings in streaming.
You know, I think she's one ugly chick.
The older recordings in physical sales.
5998.53.
She set out to do. She undermined the initial investment that others had made in her music. The people who she didn't want owning her music. I'd say that's a pretty bold move for Taylor right there.
Kevin, do you think that this would have been possible 20 years ago to do that when there wasn't digital streaming options available and you would have had to require the consumer to replace music they already had with essentially the same thing by going to the store and buying it?
That's a great point. Streaming played a huge role here. It played a huge role in the value of her music. I think streaming has astronomically led to a inflation of music catalogs. So that was a big reason why people wanted Taylor's music, but it also played a huge role in her ability to undermine that initial investment, the sale of her original recordings because of streaming. That's exactly right.
So when we talk about, I mean, like what?
Yep, I just hit my first resistance, 5998.53 on the SPX.
I got resistance from 6,005 to 6,009 on the S.
What was that again?
I got resistance from 6,005 to 6,009 on the S.
All right. You know, I asked you that. I was checking to see if you were coming up on my OBS.
Oh.
Little sneaky snake.
I got to work effort for the next 30 minutes, so I'll be on at 1:30 or 1:30 Central.
And that's a great part of her business set.
Base, and definitely one I somewhat affiliate with, but they are definitely very, very loyal to all things Taylor Swift, and
I'm not.
There's definite genius behind.
I don't
that.
think I've heard one of her
really
songs all the way through.
And so appreciate this. A fun way to close out our Friday. Thank you so much, Kevin Evers, the author of "There's Nothing Like This: The Strategic Genius of Taylor Swift."
She is not.
So now coming up next, we'll go back to retail. We're talking Rent the Runway, which I believe it has been quite some time since we've looked at this name, and a good day to discuss as we're up 31% in shares on all things subscription growth. They see no signs of slowing.
Trading at Schwab is now powered by Ameritrade.
Trading Schwab.
Giving traders even more
Trading
ways to
Schwab.
sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Opportunities don't stop when the market day ends. so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400
keeping
technical
runner.
skills. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back. Time for Under 30s. We welcome in senior markets correspondent George Tillis to help us look at rent. George, when we look at this particular name, this isn't one that I don't think we've ever talked with you about. And so when you look at the performance of the company, the business model, obviously Newly's been super successful for Urban. How's rent faring?
Well, I think it's important to have context.
George.
Obviously, today you're seeing.
Everybody keep quiet. George is on.
30%.
I need silence, please. George is speaking.
This is over $300, so it's down significantly since the 2021 IPO or listing. There's some constructive things going on.
George.
The numbers here for rent, but there's also some issues that we have to be aware of as well. I think when it comes to the seasonality, when it comes to rental of uniforms and effectively, formal wear for occasions, you have essentially high schools and proms and so forth. You have a lot of weddings coming up in this particular season of the year as well. So that might be a catalyst. The company also denoted that their active subscribers.
I need that dyno back.
By 1% to 147,000. But if you look underneath too, the total number of subscribers actually fell by 2%. So it seems like those who are signing up to the program are actually more active versus the total subscribers may have used it a couple of times and decided not to renew their subscriptions. If you look at top line sales for the quarter, at close to 70 million, 69.6 million, that was down about 7.2% for the same quarter last year. And a GAAP EPS number, to give you context here, because the losses per share were $6.58. So, that's essentially about 75 or so
What's that?
current price. But the current price has increased by about $2 per share, and I can see why, because they did denote that they're improving the number of new inventory under their program, 36 new brands.
Yeah, it is 345 now.
Increasing the number of availability of their brands, and they do expect to increase their total inventory by 24% over the next year, as well as 134% going forward. So it looks like to me that they're improving their allotment of available rental formal wear. And that's going to be good for top-line sales, but the challenge still lies, and this is where the conundrum lies. If you look at a market capitalization, around $39 million, they have a lot of debt, $360 million in debt. They do have cash, about $77 million, but again, top-line sales are still decelerating, and EPS growth is still not there.
Yeah, and I can appreciate the growth in the subscription model, and I know that they ended the quarter with like 150,000 subscribers as far as through the quarter, which is roughly half the size of Newly, of course, owned by Urban, which we discussed earlier. So I mean, like you did mention, we're still seeing a contraction as far as some of its metrics. So you have to look at this name with a huge jump today. And
George.
Yes, maybe this was a sigh of relief, but I guess it also has me questioning, like, how did we get here? How were we basically at lows and seeing a considerable downtrend over the last several years?
George looks good today. Well shaven.
Sort of, zoom out. You can look at, time frames for trading at very narrow time frames. I mean, minute charts if you'd like, or tick charts. But when I look at the downtrend since 2021, that fits with the losses that the company's incurring. Now, total revenues have increased in those few years, but if you look year over year, there is deceleration, like they denoted, 7.2% down on a year-over-year basis. So that's just going to weigh on the shares no matter what. And then you have to look at the financing needs. Now, I know today it's higher by 30%. If you look at the last 3 quarters, I'm looking at it right now, it looks like there's a possibility the stock just continues perhaps to the $10 area. But I do think, and I could be wrong here, that this company will probably take advantage of this move and issue a secondary offering. And so for what it's worth, I think we're seeing a little bit of a short squeeze today. There's a lot of momentum, low market capitalization, pushing the stock higher. And a lot of times with headlines, and it could be the good headline, which is the number of active subs increased by 1%.
Yeah.
That is a huge catalyst from a momentum, but also from an algo trader standpoint, and that's why I think it's also
We're at $6.20.
Yeah, I mean, a nice move at that, and so hopefully this is a continuation of this nice uptrend.
Man,
But
she
we will
looks
leave
hot
it there.
today.
Thank you, George Schillis, for your insight today, and as always on our show. That'll also do it for Next Gen Investing for this week and this Friday. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Do.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
What? 690?
You late 100?
Friday
Yeah.
afternoon. Welcome to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern.
930. Did I say 690? I meant 960. Woo!
Damn. This thing is not playing.
What a beautiful call. I got to take something off the table here. I got to get rid of them.
I mean, this bitch could run to 6,820. I'm showing some resistance on the daily. Like I'm just looking
orb?
at today's turning points.
Orb?
No, I'm just looking at rejection zones from earlier today. So I got on SPX, I got 6,008, 30, maybe
How about-
6,833.
Well, we're past that on the orb. Oh, what, on the SPX?
Yeah, SPX.
Shit.
So another 2 points.
Yeah. Look at the orb on the 5-minute on /ES. If you're going to follow that, that's 24. $25 would be a double top, so 24.
1190. Dude, those bitches. What did you buy them at?
I bought it at $3.
Oh my God, $800
Yep.
a contract, really?
Yep.
Oh shit, it's Apple. Apple's doing this. What the hell?
Apple. Yep.
Apple's about to pull back though. The RSI is way too hot on the top. So is Google.
11:30. $11.50.
Apple's still going.
Oh my. Life is good when you're at the 200 SMA on the 2 minute.
Where the hell do you say that at?
SPX?
On the 2 minute, I have the 200 SMA down at 59.83.80. Talking about EMA?
SMA.
My SMA is way down at 59.83.50
Oh,
on the 2 minute.
here's the chart. We're talking about SPX.
Mm-hmm. That's what I'm talking about.
You better look at your. Better redo your chart. Better take a good close look. Come on, Jimmy. Here's SPX here on the 2 minute. Better make sure that's the 2 minute. Fresh, yeah. Tweezer bottom off the 2 minute.
Which one's your 200 SMA, blue?
No, the orange one down there where the dot is.
Oh, dude, you're talking about where you called it.
Yeah.
No, I thought you said we were at the 200 right now. I was like, where the hell are you getting that from? Okay, now I get it. I thought you were saying we were at the 200 right now. I was like, no, the hell we're not. We're like 50 miles above it.
Yeah. Yep. You're right.
I've been wrong on my charts before. I was like, let me just double check this.
Sheba, don't be going on. Don't be picking sides.
Oh, Sue posted gamma exposure. 60-10. Let's see that.
$11.40. I think I'm going to go ahead and celebrate with a shot of vodka. Nancy, a shot of vodka, please.
It was a good call, my man. It was a good call.
Yep.
I learned a very extensive lesson today.
And then we retested the 63 on the way up. And then we held the 9, which the blue line. Keep you in the trade.
Yeah.
Another rule is the 9 crosses the 21. It's like a golden cross.
I actually don't see jack shit on either the ES or the SPX chart that says we're not going to freaking go to the top of the orb again.
That we're not, or we are.
Mm-hmm. That we're not.
Yeah, it's that time of day too when they start correcting.
I see no resistances until the orb. $6,020 on ES is the first one. That's 7 more points.
Hello, matey. And the momentum's behind it right now.
Apple is just carrying it, man. Apple and Google are exploding. Matter of fact, so is Meta.
I think Jimmy's gonna go ahead and do it. I could wait for I'll sell it if it goes below the 9.
I mean, right now, RSI is just taking a breath. You gotta expect a touch on the 9 and then another run up.
Yeah.
It just can't go straight up. It has to give it RSI time to breathe.
When you reach my age, everybody wants to call you.
What do they want to call you?
No man, that's for sure.
Yup. I need that drum roll.
Come on, break out. Yeah, TikTok, dude. I put it on here, the TikTok news. Yeah, look above it. President Trump is planning to give TikTok another lifeline. Yeah, if I was Trump, I'd let Elon sweat it out for a couple days and then call him Monday. Always clean. This is Jim. May I help you? Do you have any idea who you're calling? Piece of shit. $11.80. Keep going, baby. See
How
you.
do you get up there?
Yep. I'm liking 60, 15, 83. If we break to 10.
Baby boy, you do what you want. You're so far in profit, it doesn't even matter.
Nope. 12:30 right now.
My resistance zone on ES lines kind of perfectly with the top of the orb on the 5 minute on SPX. So that's my confirmation.
Yep, they're about the same width. $9. Oh God, $9.07. There's a tweezer top. There's two of them, three of them, two of them in a row.
You're at 12.30.
Yep. $12 now. Air horn. It is now 2:18. And I'm about to go fill my water jug up and go take a leak. Hello, Rose. Roses are red and violets are blue. I would love to say hello to you. Chris is thinking we're going to pull back here. I'd like to see one more big engulfing run.
Everybody's got their opinion. Mine is not that it will pull back here.
There's 1290.
Mm-hmm. She wants that freaking zone.
Yep. Well, the rising wedge is getting ready to squeeze. So we're going to know something in a minute.
There she goes. I'll tell you when she hits the zone.
Okay.
Matter of fact, I'll just call it out. It is ES.
It's pretty close right now.
60-20. When it hits ES 60-20, it's close enough.
Oh, hell. Oh, yes. Your zone is at 60-20. Yep, I got 60-21.
Well, I was calling 60-20 because I didn't want you to wait until 60-21.
Yep. I always want to sell it a little early. Well, actually, the first one's right here at if I can get it in there. Tweezer top right there at 60.18. 60.18.
Yeah, you're in plenty of profit.
Yep. And we almost hit it. Pretty close. Yeah, I think I'll do it. I'll just wait to see if it holds a 9. Right about now. So the 60.15's at 270, 265. The 60.15's at 275. They're at now 340. Profit. You're at the top of that orb. I mean, top of that wedge. $350. There's $75 for you. That's something I don't do very often.
What's that?
Buy another call when I'm in one.
For those of you new to trading, what you just saw, that 9 tap, is perfectly healthy on the way up.
Yeah, it is.
To have those. That is the market taking a breath before it pushes up again. Do not be scared of those 9 taps. They're perfectly fine.
Yep. That's what kept me in the trade. And got me in that other one. Daniel says he could see a big bounce here.
I've already stated my opinion on the matter. We shall see if I do full crap or not.
Well, I don't know. I don't like coming back down. It's a triple bottom here on the 1 minute, 2 minute.
Yeah, it's a tweezer top on the 5.
I think I'll get out of it. There, now we just now found the first bearish candle.
Mm-hmm.
$10.60.
From 3.
On the 2 minute.
No, I mean from $3.
Yeah.
Huh. Jesus Christ.
Could have been 13. So now I'm going to move down to the 15s.
Just one big knife so I can get in something. I'm fully prepared to find the nightfall today.
Chris nailed it.
Good job, Chris.
We pulled back, Chris. Oh, he mailed. He
Good
thought it was
job,
going to break
Chris.
out. Yep.
That was literally just a 9 tap on the 5 though.
Oh, yeah, on the 5 minute.
See a hell of a lot more than a freaking 9 tap for me to get in.
We're at the 21 now on the 2 minute. 3 black crows. If it doesn't hold here, it's a pretty good drop. The 215, 60 15s. Try it again here. The 60 15s at 215. Again, you know, don't go against your heart.
Oh.
What the hell?
Uh-huh.
I'm out. Just like that.
Uh-huh.
Was that a 10-second trade?
Uh-huh.
Woo! Unbelievable. I think that's the fastest trade I ever did.
There's $3 now.
Yeah, that's where I got out at.
Is it?
Yeah. But definitely it's fastest.
$3 in 1/2 of a panel.
Yeah. That wasn't even 10 seconds. Oh, Lord. Time for a Bible verse. You know what this is going to call for. I know it. You all know it.
Hi, welcome. Holster V section is right here.
Never found a four-leaf clover. Biggest luck to me. Rabbit shoot, no lucky star. No magic wishing tree, but I got lucky. I got lucky when I traded you. Ooh, got a rainbow around the shoulder, horseshoe on my door. But I got you to hold me tight. Who could ask for more? Well, I got lucky. I hit that 21 EMA.
Always walk around with all my fingers crossed. I'm afraid that I just might get lost. So won't you
Tell me that you love me, ups and make my day. My good luck is really here to stay, but I got lucky. I got lucky when I traded you. Oh, I didn't this time. On the fingers crossed, I'm afraid that I found just might get lost.
So won't you
Tell me that you love me, up to make the day.
And then I know that my good luck
It's really here to stay. I got lucky. I got lucky when I traded you. I got lucky. Damn, 560. Jeez.
Don't even look at the 6,000s out there. You, what's going to hit this zone? We're hitting the zone right now.
Oh no, there's 1,500.
That's 60-20.
Some bitch.
Oh man, sometimes it hurts to be right this much.
I wanted to make it the fastest trade in the world. And I did it.
I mean, right off that 60-20 zone.
Yep. Right off the 21 on the 2 minute. I'm liking that 2 minute time frame. It's a lot more clearer. I mean, look at this. It's perfect. We hit the 200. We bounced off the 63. We held the 9. Kept me in the trade all the way up to there. Then I got out and I bought back. And I run it up, which would have been, that would have been a hell of a trade. That'd have been $300 in 4 minutes. The contract times 5, $1,500 in 2 minutes, 4 minutes.
Yep. And I missed it because I'm over here working my day job.
Well, that's all right.
Oh, it's not all right.
Randy. Spank. Ooh, look at there. Good job, Daniel.
Oh, what did your 6,000s go to when they hit the top?
Oh, that should be a thumb down. Oh, Oh. Jimmy's Massage Parlor, may I help you? We rub you raw. This is Jimmy's Massage Parlor, may I help you?
Oh, I'm so sorry, sir.
He's so sorry.
Robo killer. Oh shit. What's going on there? Oh. AVGS about to hit my zone. Just triggered my alert.
Yep. There's a 9. I'm gonna go get some water and I'll be right back. I mean, I can't keep this luck up like this all day. It's been like this all day. I think it could. You know, I used to go to the horse track or the dog track in West Memphis, and there would be days, and all I did was bet the trifectas. And there have been probably a week's, maybe 5 days out of the racing period where it didn't matter. I'd hit every freaking trifecta. Boom, 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 boom. And on them days, you really wanted to go big, you know, gamble big, because you just hit every single one of them. And there's days where you'd win maybe 2 or 3 trifectas out of 12 races. Trifecta is when you try to pick 3 dogs in first, second, and third place. And you'd box them. And then you'd add a long shot.
Oh, so no wonder you're in stocks. You've always been a gamer.
Oh, yeah. Yeah, that started back in 2006. No, 1986. I'll be right back.
platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Pedalides. We welcome in Phil Palumbo, President and Chief Investment Officer, Palumbo Wealth Management. Great to see you, Phil. We've had some great conversations this year, and what a year it has been. What a wild ride. And the volatility seems to have taken a bit of a breather. What say you about what we're seeing most recently?
What I think the market's seeing is, I think the market's starting to understand that deals are going to get done on the tariff side. Although I do believe July and August, September, we will see volatility pick up as deals are not getting done with China and Europe, as many people believe
China
will get done. So I do think volatility will start to pick up. You know, this was a huge move off the low here. I think investors just have to be careful in the very short term. However, it is possible that markets are looking forward to what I believe what we're going to see a very robust economy. If you look at the jobs numbers today, for me, it's jobs, jobs, jobs. You know, as long as consumers have a job, they have the ability to spend. And we still have deregulation to think about, which is very important to strong economic growth, the permanence of the extension of the tax cuts, if in fact that goes through. And then you have companies that are spending over $1 trillion in this U.S. economy, as well as foreign direct investment over $2 trillion with the reshoring. So markets are right in terms of where they're trading. I just think volatility will persist because of tariffs. But over the next 2 to 3 years, and that's how investors have to look out, I see a very robust economy.
I do want to hear about the bullish case that you're going to make for Amazon, but this is the bigger picture. I mean, folks saw the S&P at 4835. Now they see it at 6,000, so they're probably feeling much better. You know, I've had so many people on who said their clients were calling. They were very nervous. They lost 25 or 50% or whatever. Do you feel we retest those lows at any point? Or sort of, when you say volatility, I mean, right now we're almost in a bull market because we're 20% up off the lows that we saw in April. You know, what do you think?
We definitely need to retest the lows. I don't believe that. I do think when I say volatility, we can see a 5%, 8% correction, but any corrections, I feel like investors are going to feel the FOMO, right? The fear of missing out. And that's why you're seeing any type of pullback in the market. You're seeing a big buying within investors. And I think this is probably one of the most hated rally since I've been doing this for 25 years. So when you
hated, it is not hated, you idiot.
Actually, you're going to see investors buy into it.
So what is the bullish
It's hated because you all missed out on it.
It's been on an uptrend today at 213, so it has had a nice move.
What do they mean? This is the most hated rally. You know, he needs to watch this channel. If he's having that heart, I love this rally. It was way overbought, you idiot. I hated it more when it was running like it was.
And they're a data and tech powerhouse. And what they've done, they've taken advantage of that in two main areas. Number one is their ad spending. Their ad spending has gone from
AVGO pulled back more.
In 2020 now over $45 billion. It's grown over 25%. It's one of the largest profit margin businesses that they currently have. Their AWS cloud business has grown about 19% year over year, and that business has doubled over the past 4 and 5 years. Well, both of these businesses are high profit margin businesses, which is the opposite of e-commerce. So we think about the next 5 years, what that means for ad spending and cloud business to their overall business. So, and not only that, when you do some discounted cash flow modeling, today Amazon's trading about 15 to 17% below fair market value. So it's even more attractive than we've seen over the past 3 or 4 years. So, and one last important point is their cash flow is estimated to go from $38 billion this year to over $100 billion in 2027. So a lot of exciting things going on in Amazon. We think it's a great, stable business to own for the very, very long term.
And I mean, obviously, you're betting on the AI part of this. I mean, when we see it at $213, the high was $242. But we know Amazon, as you just mentioned, talked about all those different revenue streams, right?
Right, correct. For me, Nicole, I look at making an investment in Amazon today. I'm more interested in where it's going to be over the next 10 and 20 years. Right? Well, it's 213 and gets back to all-time highs. That really doesn't. I don't really care much about that. I care about where I believe it's going to be based on what I just talked about.
I don't care what you think.
Overall business, because of the cash flow generation that it's going to continue to produce.
You fundamental trader, you're a piece of.
What do you think Fed policy should be right now after today's jobs report? It looks
Don't
like
listen to that guy.
the Fed likelihood of cutting has been pushed back to September, maybe one cut this year. What do you think the Fed should or should not be doing?
In my opinion, I think the Fed's being absolutely ridiculous. I think inflation is not going to be a problem. I really don't believe that. I think the Fed should start to try to balance things out, because the tariff situation is definitely, it's going to cause the economy to somewhat slow in the very short term. And the Fed knows that. So with that, the Fed should cut at least 25 basis points, if not 50 basis points. Why not? Because they're concerned about inflation going to where? It's not going anywhere. And it's pretty much under that 3% number. So for me, I don't understand why the Fed wouldn't at least cut by 25, at least, or even 50 basis points. I think it's absurd. I really do.
Yeah.
Well, I think you're absurd.
Amazon, being in the Mag
You're a pissy.
7, are there any other Mag 7 names that you almost recommended but didn't, that you do like?
Yes, I do. I mean, Microsoft, I think, is another business that, especially on the cloud business, they're even dominating more than Amazon, and they'll continue to do so. I think they're
No, you're an idiot.
Are going to perform very well for them from an earnings standpoint. Another free cash flow
You're fired. You are fired.
AVO just came off the bottom of my support zone at 247.51.
Did it?
But the EMA cloud looks ugly. And you just had a death cross, a 63 below the 200. Or at least on the 5.
Hello? I love you. Where were you last night? Weren't you supposed to come over? I waited up until midnight. You know how much sleep I lost over you, baby? I'm so tired right now. Silence. All I heard was crickets. Okay. We're watching again. Does anybody see the 63? We bounced off the... Yeah, we
Running on the 1, but we wick below it too, so we might go down to 63 on the 2.
Yep.
Which lines up with a support zone on the ES.
Yay. I'm just going to give it a little bit of breathing room. Like I said, after that last trade, you can only get so lucky. You've got to give it a break. Because if you don't, you get complacent. There it goes. Nicole's showing cleavage.
Even the electric charging stations to support EVs, really.
Yeah, the conversation is definitely heading in the right direction here right now, because adoption is definitely not anywhere close where people would like it to be right now. Even if you look at like 2030, to y'all's point, like those numbers are coming down. And I just don't think that the EV adoption is going to get the long legs like we would expect, you know, say 4 or 5 years ago, because it's all going to come down to price. And what's coming through with the reconciliation bill, what we've seen out of the House, and the potential for what's going to come out of the Senate, is that the $7,500 incentive program for EVs is likely going to go away. And so, you know, that means that there's not going to be price neutrality against, you know, EVs and internal combustions. So it's no longer, you know, of what, you know, a price, it's more of a pricing thing going on in the future that's probably going to continue the slowdown in EV instead of, you know, a preference because pricing was neutral.
And you talked about BYD versus Tesla and the pricing that it can offer in China, right? Is BYD a winner in your opinion here, David? And do you like Tesla? Quickly.
Yeah. No,
Quickly.
I like Tesla right now. What's going on in China?
You're
is
so
exactly
demanding.
What could actually happen here in the United States? There's just been slacking of prices from BYD to take market share. So a lot of irrationality in pricing, and that's definitely hurt Tesla in China. I'm afraid for that to happen in the United States, but I'm not a fan of Tesla for multiple reasons.
Well, screw you.
And Nisha Medlani, which names do you think are going to be or continue to be the leaders in the EV world in the next 5 years?
Yeah, look, specifically in the US market, I mean, Tesla is probably still going to dominate. Their market share is down. I mean, compared to 50% last year, so far this year, that share has gone to 42%. The sales are down compared to the rest of the market. But look, I mean, it's not easy to sustain 50% market share. And there are a lot of other vehicles, to your point, that are coming into the choice equation for customers. So today, if you look at it, of course, we see within the US competition from Ford, from GM, from Hyundai, from BMW. So we're seeing some market share increases for those because their price points are a little lower. But I think to the extent that Tesla can deliver on newer, more affordable vehicles, we still see some traction for the brand and growth ahead.
When we think about servicing these cars, we don't have the same data. I mean, I'm hearing getting a new battery costs so much money. Where do we stand on something like that? David, I mean, I feel like we're also a little bit in the dark. We're just not trained on EVs at all.
Yeah, no, 100%, especially on the input cost. I mean, you're exactly correct there, Nicole. I mean, looking forward, obviously, well, yesterday we had the news out of China with the rare earth materials. Some of the OEMs are rallying today, but I mean, I think you have to take this in perspective of the tariff picture. Obviously, a lot of the batteries on the lithium side are coming from China, which is absolutely going to increase the cost of those batteries. But the residual amount of those batteries is coming from South Korea, and it's not like they are exempt from tariffs either. They're hitting a 25% tariff. So I think moving forward, batteries is definitely going to increase the input cost of these things.
And I'll tell you, I had Garrett Nelson on from CFRA. He had sell ratings on Rivian and Lucid the other day. He had concerns there, so those were two names that he had sell ratings on. A final quick thought here as you look at the credit ratings, Nishit Madlani, your final thoughts.
Yeah,
You're
look,
very
I'd say that
demanding.
right now, even though with the demand slowdown that we are seeing in the short term, that'll probably help because companies don't make too much money on EVs, so there will be a short-term boost to profits if they slow down some of those investments and, of course, the mix benefits. But longer term, we think it just widens the competitive gap versus the rest of the world, especially the strong automakers coming out of China.
Yeah, and look, as you guys noted, the elimination of the tax incentives, the prices could be a headwind. Great to see you both. Thank you both. David Wagner and Nishit Madlavny, thank you. Really appreciate it. That's going to do it for me, friends. I'm Nicole Pedalini. Have a beautiful, safe weekend. Thanks for being with us here on Schwab Network. Keep it right here. Market Unclosed next.
A week ago, Bubba's up $8.
Schwab Bank Investor Checking, the checking account built for investors.
Yesterday, I called PDD under 100. Now it's at almost 101.
But at ATM fee rebates for cash withdrawal.
Yeah. What time is it? 1:50. Oh, it's almost power hour. Wow, that's a long few minutes there. Think I'll go for a walk when I get done here. Soon I got to start working on my property. I'm going to get a shed up there and a lawnmower and a weed eater, and I'm going to have a guy brush hog it. And I'm going to get an outlet hooked up to my power pole so I can plug in a camper or something. Might be living out of a camper. And get Starlink so I can trade this winter and retire. Then think about what I want to do.
Trade brilliantly with Schwab.
I don't think I want to leave until my mom passes away, and that might be a little bit longer. And then do my traveling.
List ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
It's 2 o'clock here in Chicago, 3 p.m. on Wall Street. That means one thing. We're an hour from the closing bell. closing bell for the week as well as we
We're watching.
look back at the week that was a strong one for.
We got a 1, 2, 3.
Get back to levels we haven't seen since February. Taking a look at where the S&P 500 lies. S&P 500 right now is trading higher by about 67 points. NASDAQ 100 up 260, both well over 1%.
So are you saying the fat cats missed the run?
No, welcome to Market on Close. I'm Alex.
Alex.
Say that at some point here, of course. But let's take a look at some of these other futures markets that we take a look at. U.S. dollar, gold, crude oil, Bitcoin. What's the story there? When we look over at these assets, Bitcoin, after facing a test near 100,000 yesterday, bounced off that level pretty well with some force. 3% or so rally here today in the June futures for Bitcoin. Dollar index pushing back above 99. It's been in a tight range recently, but certainly the lower end of its range. Gold retreating a little bit with bonds showing a little bit of life in terms of yields to the upside. Not entirely uncommon to see gold retreat a little bit on higher yields, especially as it seems volatility is coming out of this market. Crude oil also looking to break out of its recent range. There's been a big debate on whether it would break down or break out. Well, if today is any indication, perhaps we're looking at the midst of a breakout to the upside in crude oils. It's been stuck between about 60.5 to about 63.5. It's firmly outside that range in multi-week highs here at 64. 74. If you were to look at something, as we go back to the market here for just a second, yesterday was obviously a day that was driven by things that are outside of the norms of regular kind of market moving events.
Exactly.
But the market is always dynamic and moving. Today seemed like a day where we got back to numbers. We got back to economic data and earnings and things. Updates on the trade front. We just got from the president news that there'll be a meeting next week, on June 9th in London between the U.S. and China. But the S&P 500 reacting to better than feared job data, I think really does go to show that this market is trying to move higher and doing so perhaps in some ways for the right reasons. But more on the jobs numbers in just a moment with one of our first guests. We'll have Lisa Flicker joining us in just a little bit from Jackson Lucas to go through those numbers. I want to welcome in our first guest, though. It's my co-host on Next Gen Investing regularly here on the Schwab Network, Jenny Horn, of course, here to set up this last hour of trading, but really focus on two of the biggest stories, I think, from a stock-specific standpoint. Tesla's going to dominate news headlines as it does. Broadcom, a name we're going to talk about in about 20 minutes, is going to dominate headlines because of its size. But Lulu and DocuSign made massive moves and really drew attention to themselves today, probably more so than they normally would. Start with Lulu.
Yeah, and I know I keep saying this, but it feels very uncharacteristic of Lululemon because during all of the volatility that has been retail over the last several years, they've held on so strong until, really, I feel like we started to see a different Lululemon towards the end of, or really halfway through last year, and it's really continued ever since. So I think the question remains after this quarter is if the slowdown is just due to some of the tariff and turbulence, being this is a Canadian company, and that their tariff policy is perhaps a bit different given exposure to the U.S. consumer as well as some of the international markets, or if this is a sign of something a bit more fundamental, which I think does beg a pretty big question. They had, new products over the course of the quarter. They did launch this glow-up line of workout wear, which is basically a reiteration of their Align leggings to celebrate their 10-year anniversary. But the outlook didn't really show that these efforts were enough, as we did see pacing to be the biggest laggard not only today, but down about 16% on the week, which makes it then the worst performer in the S&P 500 on a week-to-date basis. After the company did lower its full-year profit outlook, saying the U.S. tariffs on imports threatened its margins and brought uncertainty to a retail environment where right now consumers are still seeking value. So I think the main takeaway right now is that hint at something more fundamentals at play. I think that concern has increased. Revenue in the U.S. did still rise about 2%. Same-store sales in the Americas region was down 2% overall. And they don't see any way for growth or for that to materially improve now meaningfully going forward. So, there's been then several that have stuck with their conviction, but I was reading a Jefferies note today that said Sell your shares now. I mean, that's traumatic, and obviously it's a pretty big move to the downside today, but not really seeing any signs of the overall operational situation improving for Lululemon.
Yeah, that was the Jefferies analyst Randall Connick, who also said in there that the company's worsening guidance feels like death by 1,000 cuts. Well, if you were a Lulu shareholder today, I don't know if it feels like 1,000 cuts or not, but it certainly feels like a haymaker, maybe straight to the face. This is a huge, huge move. When you look at Lulu's performance, though, I don't know that it needs to be as complicated as sometimes I feel like we make these stories. This is a company that in 2022 posted 42% revenue growth, okay, 65% earnings growth. Those numbers have declined in the case of revenue from 42 to 29 to 18 to 10% for 2025. Now, based off this first quarter of their 2026 and the guidance now, we're talking mid-single digits for 2026, with earnings having gone from 65% growth in 2022 to 29 to 26 to 14 to flat for this year. To me, that tells a story. This no longer is a company that's growing with dramatic outsized growth for the apparel space and no longer growing earnings at all.
No, and I think that that's a great point. I mean, yeah, the numbers speak for themselves, and I think that then you see brands that have taken some of that market share with like consistent stellar growth. Like On is one I tend to think that is, you just see growth in that company every single quarter. But Lululemon, not typically seen as like a footwear provider, but they do have now running shoe offerings, and I think that that's fighting in a market that is so saturated. Athleisure now is extremely saturated. I mean, it's not necessarily a trend that's weighed on Lululemon, but it shows that so many companies took a page of their success, and unfortunately, I think have done a bit better as of late. Like Alo, Beyond Yoga, I mean, we could just list hundreds of retailers that compete with Lululemon right now, and as we start, I feel like started this week off saying, in retail sometimes I think you just look around and see what people are wearing. It's always such a good read to me on like popularity and trends. And Lululemon's also expensive. If you're trying to trade down, this is not where you're doing it, especially when they said they're raising prices now midsummer and the end of this year.
Yeah, I think that's a really key part too, which is at the same time they're being undercut in a more competitive environment, they're not going to try to keep prices stable. They're struggling with where prices are, and they're going to try to pass on more.
2 minutes showing a double bottom.
Isn't the rest? It's not a company. It's not a decision a company would make from a place of.
It's 2:09, 3:09 Eastern time.
So it's just an interesting dynamic. To your point on though, 29% growth, almost 30% growth for their last full year. Expected to be around that for the next full year too. So. Keeping its growth intact. Let's talk DocuSign. Now, this is one of the bigger stories of the day, and I got to be honest, it's not one that's been on my radar for much of the day. Lulu certainly has been, but DocuSign, not to the same extent.
Okay, not to the same extent, and I thought you were going to say not one that's been on my radar for, I mean, like the year.
Maybe that's what I was trying to find the words to say. Is it's found its way off my watch list. We'll put it that way.
It has also found its way off of my watch list. I mean, this morning I was looking at this name, and I was like, I know we were joking like years ago that this would be a good M&A target because its business is just so replicable, and also one where it feels so niche. I know they've been trying to carve out their way into AI, but I mean, like, for example, I've signed a lease in the last few months and I did not use DocuSign. So they're competing right now in a market where it's like seemingly easy to duplicate technology. Nonetheless, I mean, shares did tank today. We're down pretty substantially here. Billings missed their expectation following several quarters of this material outperformance. And also we saw full year guidance was lowered by about 50 basis points despite what has been seen still as tailwinds for the company. So there was still, I mean, things to like. We saw a beat and raise quarter as far as some of their specific metrics, like total revenue growth was 7.5%. That's not bad. Subscription revenue growth also was around almost 8%.
Okay, we got 1, 2, 3.
Again, billings growth, which decelerated to about 4% year over year.
Out of the flag.
Least growth. It was not like we
it's either do or die.
But that's a deceleration from the almost 11% growth we saw in the prior quarter, resulting in a value of around $740 million that missed guidance for around $741 to $751 million. And they raised now their 2026 revenue guide, which represents growth of around 6% at the midpoint from their prior outlook, which called
It's Friday, so you got to be real careful on Friday. Now we know that Trump's going to be meeting up with XP next week. So that's going to be real good news.
Danger, Will Robinson.
That'll be good news for the market. No, I'm not going to swing nothing.
Danger, Will Robinson.
Yep. We got another 3 black crows here off the 50. So I'm going to give it a shot. The 60-15s. I don't know. I'm real tired. I've gone to church 5 months in a row now without missing a week. And for the first time in my life, I listen to the Bible station on the radio when I'm going to bed, except when I'm getting ready to cuss out the phone. How many times you gotta call this place? It ain't gonna do you no damn good. You understand? You know, you're driving my business nuts. Man, this is a massage parlor. You just can't keep here calling up thinking you want one. She made me miss that frickin' trade, you idiots. 120 by 170. $50 right there. Tweezer bottom, 3 black crows, same damn thing right here. La 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 la.
Count to 3 and trade with me, but count to 4 to make much more.
Yes. Now this is the last touch. It's either going to break out big or it's going to pull back low. And I think it could pull back and then have the breakout. Do you agree? Simon says, pull back. Or I'm calling for a drive. Jim, I don't know how you've done this for 20 some years. Now we're back to the 63. Oh.
Here we go. I'm pulling back to my other support channel, and it is now 21.
I'm really tired.
That ain't all you got.
60 tens. Something tells me just wait.
Mm-hmm. That ain't all she's got. She's playing with us.
Yep.
They call them dumps, big massive dumps. They call them dumps, big massive dumps.
Yeah. I'd like to see it come back to the 200, but I'm about pooped out. Oh, they're talking about shares fall from all-time highs after earnings. Broadcom. It's at 292. Might take me a little nap after I get out of here and wait till dark and go for a night walk. I'm a genius. Never been called that before.
Damn, Tesla.
It's true, Josh. What's Tesla doing?
Dying. Suddenly.
Yep. I think this little fit that was thrown yesterday hurt Elon more than it hurt Trump. Did we just get a bounce? Yeah, we did, didn't we? It's up $1. Well, next week I think it's going to be a good week. If we make the deal with Xpeng, we'll break the resistance level that we're moving up on. I'll do a video this weekend, get it out.
Alright, we're sitting on the 63 on ES on the 1 net. Sorry.
Infrastructure, and they're spending billions right now on accelerating the spend of these data centers that do use the same chips. They do use the same infrastructure in terms of networking. Optical networking is now blowing up as a sector that I think we're going to focus on a lot in the next couple of years. But yeah, these companies are all looking at each other and trying to match each other, buying the same stuff, and it's been greatly to the benefit of companies like NVIDIA and, yes, Broadcom.
When we kind of look at how, money is being, positioned, and you can look at things like, valuations, and clearly there's right now a preference to pay up for, some of these areas like cybersecurity, or I'll throw a Palantir in there as well, where it's like, hey, I don't necessarily know the long-term runway to these companies, but it feels like the sectors they operate in aren't being disrupted by AI, or they are the AI themselves. Do you think that makes sense?
No, it doesn't make no sense.
Risks that it's brought to places like Adobe maybe, or Salesforce, where it's like those were traditionally stable companies that AI is disrupting. I know this is kind of a tangent, but I'm looking at this and clearly there's a preference to pay up for what's working. And is it because the risk in places that have the questions is too great?
So I listen to hundreds of, I gotta get a better life. I listen to hundreds of conference calls all year long. And this quarter has been so interesting because what's on the front page of the New York Times or the Washington Post or the Wall Street Journal talking about what's going on in the White House, talking about the thrilling tweets we got yesterday. But that is affecting business planning. And you hear it in the conference calls of these companies. And I do the Drill Down podcast and not to plug it, but we've got so much fodder right now because the companies are saying really interesting things about the business environment. And what I'm looking for is what the customers of these technology companies will decide not to spend on. Where they can decide, the cybersecurity companies all tell me, Palo Alto Networks, CrowdStrike, others, tell me that their customers have to keep spending on cybersecurity. It's not a question of if they can make choices, but you see in the results they've been a little bit bumpy. And you can see this happening with a lot of technology companies. And yet the AI buildup continues to be a point of emphasis here. So the softness in the business planning world is affecting these companies, and you're seeing it in the conference calls right now. So you really don't know what you're going to get on any given day when these results come out. But you see companies like Rubrik, like Broadcom, come out with really strong reports in the face of incredible uncertainty in business planning. Customers who write big checks are always looking for a reason to say no, and they're not finding when it comes to Broadcom or the other companies I've mentioned.
Yeah, and even with the really nice reports, still not even enough today to keep Broadcom at highs. But hey, it was at
Look at the
highs.
stock in the last year.
Exactly.
It's been spectacular.
I was just tongue-in-cheek. Corey Johnson, I really appreciate it. Chief Market Strategist at Pacific Capital Research and the host of the Drill Down podcast. Thanks for taking the time. Coming up, it's the Options Corner. Kevin Green's going to join us, look at some of the levels he's watching into the close.
Forgot about my orange today, so I'm going to have it now. Might get one more trade in to close. Always clean, may I help you? Yeah.
Good afternoon. My name is Sabrina. The new Trump administration has changed the Medicare policies for your state of Missouri. We have to check the benefits available for you. I believe you already have Medicare Part A and B, correct?
Your call says OHN restoration. That has nothing to do with healthcare.
Well, I was asking if you have both Part A and B of Medicare.
It's none of your business.
I understand your concern. All I need is some basic information to see if you qualify for our plan.
Okay, we're getting down here now. Load up.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths,
The 60
stacked
tens
content curated to fit your unique goals.
at
You can spend less time
$1.40.
searching and more time learning. Trade brilliantly.
This can easily drop down here.
Just under half an hour to the closing bell. It's time for Options Corner. Welcome back to Market on Close. I'm Alex Coffey, joined by Senior Markets Correspondent for the Schwab Network, Kevin Green. KG, how's it going? What are you looking at here into the close? It's been a choppy back and forth
125.
day, but one that's, I think, been pretty consistently bright green all session long.
Yeah, I mean, if you're looking at the broad participation in the market, that continues to hold up, but we have been in a consolidation range here. We had a little bit of a breakdown, kind of going below that 59.85-ish level for around maybe 10 minutes or so, but we had some buyers kind of stepping in. I think this is actually a very big close that we're going to have here today. Can we get above or even close at that 6,000 level? I think that's key. It has been an area of resistance, but today we've been actually traversing more above that 6,000 line than probably under that level for now. So hopefully that's going to be something that does take place here because it gets us fairly close. So going into the close, where do we see some positioning here? The 60-10 level is going to be the very key area of resistance. Last time that I checked, Alex, I'll get you the updated number here. Yeah, there's over 105,000 contracts of those 60-10 calls that have been traded today. So a lot of paper that's sitting there right now. That'll be a key area to try to break through.
Well, I missed it. Damn it.
60-20 is possible here.
120
I think that's going to be a
180.
wall at 60-10 level. So the downside 59.90 is going to be your negative area you'd like to see us contain. So right now the position is really kind of showing you that we're hopefully going to have some compression going here into the close. You have some pen risk once again sitting at that 6,000 level. How does the market want to position into the weekend? I think that's going to be another big question mark. We'll get that mark on a close order. About 10 minutes left to go into the close. That might gyrate us a little bit here, but So now when you're kind of looking at everything, it seems like we're going to be compressed within these two ranges. This 20-point range between 60.10 to the upside, 59.90 to the downside. If we break below 59.90 and it's aggressive, you can look at 59.70. It's going to be a lower end of this channel that was developing that we broke out of about maybe an hour ago, hour and a half ago.
60-10 paper, I mean, that's traders thinking this is closing at the highs, if they're buying those, selling them perhaps, who knows. But KG, when you look at those two bands, right at 6,000, of course, could make sense. But either way, any of those numbers you post, all of which would be a really, really nice week. So unless there's some dramatic surprise, based off what you're saying is, I mean, this was a win for bulls this week.
Mm-hmm. Yeah, it definitely was, especially if we were able to close near the highs
Very much so.
For the week. And if you kind of take a little bit of a step back and see the weekly chart, I think that also kind of tells you a little bit more of the story. We continue to be in this ascending channel, if you will, from the lows, and really respecting not only the resistance level but also the support level. It's been a very thin line if you're looking at that weekly chart.
Show us.
And we might actually have a fairly bearish cross going into the close here, going into the weekly chart that we have here. You could actually see potentially a bearish, bullish cross happening in the next week or 2 weeks. And the weekly chart's really still giving you a setup where we could be contesting all-time highs. We're actually only 140 points away, Alex. I mean, you have 2 or 3 more days like today. We're pretty much right there. MACD's still in a bullish formation with that 12 EMA above the 26 EMA.
The MACD's crossing.
We are getting oversold overbought territory, but nothing that's too concerning here. So overall, there's
what a nice rebound on the weekly.
A lot of traders, even yourself, myself, right, we've kind of questioned, does this look like a 2022 style?
I said 292. I go, what?
And we would have to basically fail right here in order to match what we saw back in 2022. And the momentum and the technicals look a little bit better and are faring better now than where we were in 2022 here. So unless we have something that hits the tape that's not great, right? China talks on Monday break down. Inflationary numbers that come in really hot next week. The trend still seems like it's to the upside. We will have continuation when it comes to the positive bullishness that we have in this market right now.
Yeah, the only things that I could say that are really the same as 2022 and now, and the reason that comparison kind of makes sense and kind of doesn't, is the tariff trade policy conversation to the extent that it did, and the interest rate hikes that you saw to the extent you did in 2022. Both were things that a whole generation of traders, in the case of the tariffs, all traders had not seen, and it led to this tremendous volatility as people are trying to figure out, what are things worth? What do I want my portfolio to look like? And then things get emotional at times. But other than that, I mean, we don't have an interest rate complex that's moving dramatically to the upside like we did in 2022, so it's really hard to compare the two. When you look ahead, though, to next week, KG, you mentioned those chats that are expected on the trade front between the U.S. and China early next week. Is that what we have to have circled on the calendar for the next big thing? Because it seems like we're just going from one event to the next. We got through jobs. We got through some unplanned political stuff this week. Now is it time for the planned political things next week?
I don't think it's look, the trade talks are going to.
I think AG was too high for me to be calling out.
To them, so that's going to be very interesting.
Now that I look at the weekly.
Look, I think the big thing on the calendar that could be a risk to this market is going to be the inflation data on Wednesday. That's going to be your big potentially.
We're at 90 cents.
And it's not only because
we just hit the first support.
Remains sticky, but you are seeing some of that subside within the housing data. But the energy component within CPI is not going to be as favorable. It was a major deflator last month. It's not going to be this month. Prices have remained at least sticky, and we have actually seen some increases when it comes to gasoline prices as well as oil prices here. I think that's going to be your biggest risk. That could give you that stagflationary fear if we do have headline CPI coming in, let's say 2.7, 2.8%. It's expected to come in at 2.5%. Let's say it comes in a little bit hotter. I think that's what gives you the bearish tone in the market. Outside of that,
95.
Really on my radar, that would say, or give me a little bit more fear in the market.
We were there, but I didn't get it.
That's something to keep on the radar. University of Michigan.
I just don't want to push my luck.
Friday.
I've had a perfect day today.
Discount that. I think it's the inflationary data that we have on Wednesday that could be the.
Is it safe, Kevin, to say that just a big surprise either way in inflation data could be a risk factor, but if it comes in within a tenth either direction, it's probably not that big of a deal?
Yeah, well, I mean, if you see a massive re-rating to the downside for CPI, I think that gives the Fed maybe some confidence that it can do a maintenance cut. I think the market's pretty much trying to. The market wants to see the Fed cut one way or another. Either it's going to be job market deterioration or inflation going in the right direction. I think that's going to be the way the market trades it. Now, if it comes in at 0.1% either way, if you're looking at month over month, could it be a big headline mover? Probably not. But I would say the real risk is to an upside inflationary print rather than downside.
Agreed, but I think if this thing came in negative month over month, deflationary recession concerns might be peaking up too. I just don't see that happening in the backdrop that we've had, just because we're talking stagflation, not deflation, but that could be interesting if it did. Really complicate the story. KG, appreciate it. As always, we'll catch up in about 20 minutes or so. Coming up next, we're going to look at some commodity markets, talk with Phil Striebel from Blue Line Futures. We'll be right back.
Believe me, when it comes to investing, you'll love Carl's Way.
Carl's Way is the best way.
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Carl's Way is the best way.
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Carl's Way is the best way, and don't forget it. Ooh, yeah. Ooh, yeah.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go, at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Alex Coffey, joined by Phil Striebel of Blue Line Futures.
Coffee doesn't sound too bad right now, Mr. Alex.
Blue Line Futures. Always a pleasure. Happy Friday. Long week, but a green one for equities. Let's talk some metals, though, if we could, Phil. I mean, looking over at gold, it looked like it was waking up again, and then it ran into the brick wall.
Yeah, gold actually reminds me of that song War. It's gold, what is it good for? Absolutely nothing. So, you look at the price action in it, it was all the tariff uncertainty. Now tariff uncertainty is starting to die down. You've got a lot of discussion about U.S. and Chinese negotiators. They're going to resume those trade talks on June 9th. And we seem to be moving forward when it comes to
there's 40 cents right there.
See some of that premium come out of the gold market. Plus, we just got alleviated concerns about an imminent economic slowdown. The markets are trimming those bets on Federal Reserve interest rate cuts. The dollar index is climbing. So we've got the unemployment rate holding steady. Non-farm payrolls are increasing and wage growth is accelerating. So it's really helping alleviate those concerns of a deterioration in labor demand.
Interestingly enough, as gold seems to be maybe stubbing its toe, I'm not sure it's turned, outright concerning just yet for the gold bugs. it seems at the same time, silver's going the other direction. I know that they're different. They're oftentimes clumped together. Silver's got a little bit more industrial use as well. But momentum's picking up. A bit of a breakout, it looks like, on the chart. And a green session here to close out the week when gold's red. What do you make of the silver move?
You look at the gold-silver ratio, it dropped from about 101 a week ago down to about 92. So it shows you that there is a
140. Shit.
Whenever you come out of any kind of like economic crisis, whatever it is, COVID, financial, these tariff discussions, you're going to see gold futures. They fulfilled a need, the safety. Now that the safety is done, policy shifts, market shift, and things like that. And that's where you get silver prices pushing higher. You see silver and platinum, they reached 13-year highs and also retesting some of the highs in early 2022. So ETF holdings are continuing to increase. We've got silver-backed ETFs up 8%, the platinum-backed ETFs up about 3% since midway. So you're seeing investor interest really come in there. What's surprising is the sell-off in the copper market because we've seen falling stocks on the LME. They now stand at the lowest since 2023. So can silver hold with copper futures selling off? That's the big question.
Well, and then interestingly enough, you look at crude oil, you're trying to look at this three-headed monster of these assets to say, hey, are we worried about the economy or not? And then crude oil is starting to ramp back up. We've talked about whether or not it was going to break out of this range higher or lower. I think arguments could be made for both. Hard to see, maybe triple-digit oil anytime soon, but maybe a retest is 70. What are you watching here?
Well, triple-digit oil, I mean, you're going to need serious geopolitical deterioration to get that kind of structure in that market because of the fact that, you look at the market, it's quite well supplied. We're seeing money managers and the CTAs, they're starting to reduce their short positions. They've decreased it significantly from yesterday to today because of that economic jobs data coming out, showing that the economy is quite strong. So you might see some of that demand start to pick up that was trimmed off. Now on the supply front, that's a bit questionable. You do have a hard stance with Iran going on right now, and you also have hard stance with Russia, and then you've got Saudi Arabia, who's kind of the wild card, and they want to flood the market with cheap, good oil and capture more market share. So yes, you do have a few different components there, but the price action just shows you that I think that the bears are starting to throw in the towel a bit, and that's where oil futures are rising back up to what was old support, now became new resistance, and now we're breaking back through it.
Would you say, though, looking at that market, that there's maybe still more downward pressure than up, and this might even just be a short-term pop?
I mean, it's tough. It's tough to say. If all of a sudden that the market starts flooding with oil and shale producers come online and you get maybe all of a sudden the economy does do a boomerang and it was a little bit more delayed reaction on some of the labor data and the economic data deteriorating, yeah, perhaps you get markets rolling back over. So if you were bearish on the market right now, I think that obviously was with us at the top end of the range, one of the highest levels since that big sell-off in April. You look at a put option there. Market sells off. Maybe you start trickling in some of those micro futures against that put on the big contract, and you're kind of playing it, Texas hedge both ways. So you either get that breakout to the upside, you make your money on the futures, you trim off the put, or vice versa. The put acts as your safety net.
Well, gamma scalping, it's professional strategy here. A little bonus from Phil. But last thoughts here. I want to go to Bitcoin because this is another question. I'm not saying this is my opinion, but I think that a relatively fair argument could be made that Bitcoin, in a way, sounds crazy saying this at the same time, could be a little bit barbelly right now, where it has the gold-like risk-off aspects, if you want to believe in that aspect of it, but it's still a risk asset. You had a nice green day in the markets today, you get 2.4% in Bitcoin.
Yeah, it did snap back here after yesterday's sell-off, and I think that a lot of the Bitcoin participants have actually exited the market near these highs, and what they're doing is they're playing that IPO, whatever that circle thing is. So they're using that as their Bitcoin proxy and also chasing other risk assets. The chart pattern is real interesting on Bitcoin because you had that breakout to the upside, you flagged for a while, you took off, you retested that double top that we've seen, the all-time high, and really you couldn't build on that and break out. I think that was a great opportunity for it to run up to the 125, 150 mark, but we pulled back to some support and now we're starting to push back up. So I think it's more of a range bound asset, maybe 98 on the downside. My line in the sand for being aggressive about it is probably the 100,000 mark. We close below there, might be forming a head and shoulders, and I'd probably lighten up on that market, you know. So that's kind of the way that I would play it tactically, but I would look at selling any kind of rally up to 108 to 111.
Yeah, and the nice thing too is although Bitcoin's volatility has certainly come down, even in this sort of new, more calm Bitcoin, we're still talking about something trading 42% implied vol, and the range you're describing still, 8 or so percent, and it can move that in a hurry. Appreciate it as always. Have a great weekend. Phil Strebel, Chief Market Strategist, Blue Line Futures. Coming up next, it's the big picture. We'll have Cooper Howard stop by, wrap up the trading day, talk a little bit about this morning's jobs data, what that meant for fixed income markets, right after this.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
It's time for the big picture. Welcome back to Market on Close. I'm Alex Coffey, now joined by Cooper Howard, Cooper Director and Fixed Income Strategist for the Schwab Center for Financial Research. Cooper, happy Friday. Thanks for taking the time this afternoon to join us and close things down.
We got 6 minutes left, and I can't wait for this day to end.
The day. That was the jobs data that really kicked things off. What did you make of the report?
I loved it.
Thanks for having me, Alex, and happy Friday is for sure. I think that the market's really cheering that the jobs report wasn't as bad as originally expected. So
I didn't expect it to be bad, you dumbass.
GDP this week that was pretty soft. So I think the market was really positioned for potentially a little bit.
See, I didn't expect it to be that bad. All the fat cats did. Once again, they are wrong. Inflation has dropped. And once again, they are wrong. The feud between Elon and Trump, once again, they are wrong.
On the surface, it wasn't as bad or as good of a report as originally expected.
It was excellent, you dummy.
I think, though, if you look under the surface,
Uh-oh.
things are a little bit softer. So what it suggests to me, Alex, is that the labor market does continue to soften, but I think the market's cheering that it wasn't as bad as originally expected.
I think that's extremely well put and exactly my takeaway. Better than feared, but more of the same. We are slowing.
And what's the problem with that?
To cliff anytime soon, at least not yet. So what does that mean for the Fed? Is it, again, more of the same, where we're in this paradox where the market keeps expecting
Paradox.
economic activity or something, the labor market to crack, and the Fed's going to have to run back and save us, or things just keep going ho-hum, as you say, and we just keep pushing these rates back, these rate cuts back like we have for 3 years.
You know, I think that that's an interesting point. I think that that's kind of what we're
The rates are too high.
So long as the economy continues to chug along like we're doing so now, if you look at GDP growth, that is trending 2.5%, 3%, depending on.
Again, they're wrong.
But that's not bad. That's not great. And if you look at kind of the other hard data metrics, the economy is holding up all right. The soft measures, those are the ones that are a little bit more concerning. So long as we continue to get good data reports, or at least not significantly negative data reports, then I would think that the Fed's going to be content with where they're at right now. They've already preached that they're going to be patient with where rates are.
We'll get a new Fed in there and things will be different.
Quickly and risk one thing going haywire
Knucklehead.
or another. So right now where the market's betting, Alex, they're betting that we're going to get between 1 and 2 rate cuts prior to the year end.
No, they're not.
About a 50% chance of that first rate cut coming in September. I don't think that's inappropriate. I think that probably makes sense given where we're at today. And again, if we do see the economy continue to chug along, I'm not surprised if those rate cut expectations get pushed out further.
Which again has been the story since 2023. We've been pricing in these rate cuts and pushing them out for a long time.
Exactly, too long.
Those futures are really accurate. 20 days out, 10 days out. You start going out further in time, there's a lot of variables that we still figure out along the way, and things can change in a hurry. Talk to me real quick before we go. For those who are looking to branch outside of maybe treasuries within the fixed income, but they don't want to sacrifice quality, where are some other areas that you guys are looking at?
Yeah, so there's a lot of volatility in the fixed income market, but also there's a lot of opportunity in the fixed income market. And Alex, one of those areas of opportunity that we think is the municipal bond market. And I'll just boil it down very simply, is it comes down to the fact that yields are fairly attractive right now. On a broad index of municipal bonds, it yields about 4%. Given that they're exempt from federal taxes and potentially state income taxes, we think 4% tax advantage looks pretty good in this environment. Also, credit quality, we've probably peaked in credit quality, and we're moving down in terms of where the outlook is going forward. But overall, things look okay right now. So we think given yields and credit quality where it is, that's an area to where investors might want to consider.
Thank you so much, Cooper Howard. You enjoy the weekend. We'll catch up next week. Cooper, of course, Director and Fixed Income Strategist for the Schwab Center for Financial Research. We're about 2 minutes from the closing bell. We're going to take a short break. When we get back, those bells will be ringing. We'll see where we shape up. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern.
Woo!
Schwab Network.
There's the knife. Okay, well, that's it.
What's up?
What's up? Carl's the best way. I want to thank everybody for showing up today and learning and sharing ideas. I'm going to do a live thing tomorrow morning around 9. So if you want to go over a few stocks and a few ideas tomorrow around 9, I'll be here Eastern time. And right now I'm going to shut this down and get some rest. And catch y'all later.